Welcome everyone to webinar 2 of the Oliver Kell Swing Trading Masterclass. Super excited to have you all here, and this is going to be a really excellent presentation from Oliver. Talking about what we'll be covering today in webinar 2. Oliver, if you go to the next slide. This is focused on finding true market leaders, how Oliver basically identifies opportunities, organizes his watch list, his scans, and also his daily and weekly routines. And going through the agenda of today, we'll be starting off with some overviews. Oliver, if you go to the next slide, please. First, we'll be talking about the scans overview, going through the tools that Oliver uses, going through each individual scan, the list, the weekend routine, daily routine, and finally a live walkthrough of how he uses FinViz, MarketSmith, and also TOS to organize and prepare for the next day. And then obviously at the end, we'll have a dedicated Q&A section, and we'll also be answering questions live throughout the session as it's relevant. So please, during the presentation, let us know your questions down below in the Q&A section. That kind of helps keep everything organized, and we'll try to get as many questions answered as possible. And also, this is recorded, as you can see down here on the screen, and it'll be archived for you to watch as many times as you want. So with that said, once again, super excited to have you all here, and I'd like to introduce the U.S. Investing Champion of 2020, Oliver Kell. And Oliver, I'll hand it over to you.
Okay, thanks, Richard. Hey, welcome back, guys. Glad we're kind of hopping into session 2. And another thing, we're going to go through UPST at the end as well. I know that's something that people definitely want to review, so we'll look at that. And so one of the questions that I always get is, how do I scan? How do I find names, etc. So kind of before I hop into all the different scans, lists, etc. that I do use, I want to emphasize that I really do just look through charts, and I often do trade a lot of the same names over and over again. Usually a name that I, trade well and have a winner on and maybe step aside on, that name will oftentimes set up again, maybe 2 to 8 weeks later or something like that. So I am often trading the same names over and over again. Now, there's certainly exceptions to that for sure, and things go through cycles and you have to find new names, and that's where the scans and the lists and things like that come into play. So let's hop right to it. So I'm going to start with the scans that I run. I'm going to kind of give a brief overview, quick run through of each, and then we're going to go into each and I'm going to break down exactly how I do it. So key thing here, I think you talk to anybody who's been trading for a long time and has had success, they likely have some sort of routine as to how they go about their day, and it almost just becomes second nature. So it's going to seem like there's a lot of stuff on here, but I'm doing this all I'm not even thinking about it. I'm kind of doing it throughout the day or quickly after the close. And as you do it more and more, you just get faster and faster at it because you kind of get an eye for what you're looking for. And, you got to love the routine. It's very, very key. So first things first is just my bull snort scan. In a nutshell, this is just, we're looking for enormous volume. So I hear people say all the time that volume doesn't matter, blah, blah, blah. I totally disagree with that. I think volume's the key. And if I can find a situation where there's enormous volume, oftentimes there's a potential trade there over the next couple of days or weeks. So volume equals price, cause equals effect. If you can find big volume, it can often be the cause for that effective future price advance. Next would be gappers. So I love stocks that have huge gap ups that remain unfilled. So most people think gaps fill, and the little gap ups, gap downs, of maybe 0.5% or 1% on no news or something day to day, they often do fill. But big gap ups equals the streets caught off guard. This is a key thing for me. And if you just think about that statement there, if you get a huge gap that remains unfilled, it can often be a breakaway gap, which can lead to a big advance. And the reason they remain unfilled is often there's some sort of news that the market wasn't expecting, right? So let's say a massive earnings surprise, a big upside beat, and maybe some of the big institutions are under positioned in that name because they just didn't expect the number to be that good. Or if you trade biotechs, maybe an FDA approval or something like that. Really, it could be anything. Maybe it's a pre-announcement that, again, the street wasn't expecting, and it's way higher than anything people had modeled. And now all of a sudden people are scrambling to get their shares, and it keeps the gap unfilled and then leads to that advance. So those are two of the main things that I look at. And oftentimes a big gapper will be a bull snort. So those are two. Then strength. This is something I'm really doing on down days in the market. I just have a relative strength scan where I'm looking for names that are green. I'm also just doing this by scrolling through my lists, kind of seeing what names are holding up the best. That's really the way that I look for strength. But this is a great little scan because if you get, if you fall into a correction where maybe you're green, 10, 12 of 15 days, and 9 of those days or 8 of those days you're finding a name that's bucking the trend, that's certainly going to be something that you're going to want to pay attention to. Especially in corrections, this is important because that's when you really find new names that maybe you haven't traded before. Then a doublers scan. So this is stocks that double. It's really that simple. One thing I learned early on, specifically from Dan Zanger, is that stocks that double tend to be the ones that double again, which is, contrary to popular belief. I really learned this. There was this biotech stock. I can't even remember what year, but I remember the ticker PCYC started at like $12 or $20 or something. I can't even remember. And it just kept doubling. And people kept saying it can't go higher, can't go higher. And then I think it got bought out at like $250 a share or something like that. And that, to me, when I saw that happen, I was like, okay, stocks that double tend to be the ones that double again. And I think that's very true. So then 52-week highs, it's really that simple. I'm not reinventing the wheel here. I try to track stocks that are making new highs. In this case, it's really one, you can find winners there because every big winner is going to make a 52-week high at some point. And then from that point on, they're just going to keep making them. But also you get a sense for what sectors are in favor. So if you start seeing, more recently, I know a lot of people have probably noticed the financials and oils making highs. It just gives you a sense, that's kind of where money's moving. We're seeing sector rotation, those are the sectors that are kind of getting capital. So you can track it, one, to find new ideas. I mostly trade a lot of tech growth type stocks, so I might not touch those oils and financials, but I still want to know that's where the money's moving, so that I can just understand how aggressive to be with the things that I am trading. So I think it's important to track that 52-week highs list. And then percent gainers. I'll just kind of pull this up on Thinkorswim during the day and sort it by high price. And, if the stock's up 30%, I want to see it because oftentimes that ends up being a bull snort or a gapper or something. There's usually something unique going on there, and I want to pay attention to it. So the tools that I use to run my scans, finviz.com. I'm going to kind of run through this, but you can create a free account and save your scans. I've been using this for 10 years or so. I think it's super basic, super easy. There is a premium version that people use. I've never used it. I'm sure there's some good added benefits to it. As I think some people use it, so maybe check it out. But for me and what I need, the free account works great. Then MarketSmith, it's definitely, from what I can tell, for people trading growth stocks, the top tool out there. It's about $100 a month. Full disclosure, I've never used it until this year. So I'm trying to learn the product a little bit better myself. I'll show you the main way that I use it when we kind of go through the run through. But there's certainly some great scans on there and things you can utilize to help you build a watch list. which, I'm trying to learn that myself. And then your trading software. So each trading software has scanning capabilities. I use Thinkorswim. I know a lot of people use TC2000. I think it's got some pretty great scanning abilities. So I can't talk too in depth there because your software is kind of specific to you. But I'll show you some of the ways that I use Thinkorswim. So kind of how do I set up these scans? So the bull snort, I've just taken a screenshot here of FinViz. This is my actual bull snort scanner, and it's not that complicated. I scan for stocks over 20 bucks with an average daily volume over 500,000 and a relative volume over 3. So basically is what I'm doing here. I don't really like trading cheap stocks. I could probably lower this to 15. But kind of the way that I view it is, if a big winning stock is really going to work out, it's going to hit 20 bucks eventually, and it'll pop up on my scan eventually. Average volume, I do generally like trading stocks that trade well over 500K a share or per day, often over 1 million. But I don't want to choke anything off. So I just want to see the names that are up on volume. And then I can kind of use my discretion as to which ones I'm actually going to trade. And then relative volume. So I can't say I know exactly how FinViz looks at the relative part of it. But basically it's 3 times what the average daily volume is. So let's say you're looking at, the 50-day average volume, the 20-day average volume, whatever it is, you're just looking for 3x, whatever that number is. And it's really just a sign, hey, this thing is printing, a significant amount of volume. And often the best ones will be, like 8 to 10 times the average daily volume. So I'm not looking for the stock that, maybe trades 1 million shares a day and today it trades like 1.2 million, like a good volume day. I'm looking for that real outlier, like the 3 million when it normally trades 1 million, or the 15 million if it normally trades 5 million. And hopefully, the 30 million if it mostly trades 5 million. So this is a real simple scan, and it gives you a list of names, and I'll kind of show you how I just kind of scroll through it and find, pull out the ones that I want. So one of the, I'm not a pure can slim trader, and I find some of the quickest, fastest moves you can get are actually, a name that pops up on a bull snort and makes like a very quick, 30 to 100% advance in like 3 to 5 weeks, or, sometimes even quicker than that, 2 to 5 weeks. So I put a couple examples here of some trades that I took earlier in the year. So Triple D, this was a stock or this sector. I think I traded a lot back in like 2013 or something. So I was familiar with it. And there were some other unique things happening on these charts. They really shook out the lows on the monthly and whatnot. But as what happened here is Triple D pre-announced, I believe it was a pre-announcement, right here, and you can see this just enormous volume, just absolutely enormous volume. Look at it to the left. I mean, there's nothing even remotely close to this. And if you were watching this, sure, you could have bought this breakout for sure. But almost the power of the bull snort is, I'm not scanning and looking for names off the lows in my day-to-day routine. But if I see this enormous bull snort, now I have an opportunity to wait for an area to kind of hop on. So SSYS is a stock in the same sector that fundamentally I actually like better. And, there are some reasons for that, but you can see that this also is up on volume, mainly on the Triple D announcement. And then is what I do is I wait and I look for an area to kind of hop on for the ride. So I actually found SSYS in this particular instance to be easier to get involved in because it kind of had this little flag. You can see the next day it does get volume, but then the volume really dries up here and you get 3 light volume days, an inside bar here. And when we take out this high, you can get long, and then you can see that this literally rallies about 60%, in 3 to 4 weeks. And when it loses the moving averages or this channel, or maybe you're taking some into strength, depending on your style, you're getting out of the trade. And same thing with Triple D here. It basically had not an inside bar, it failed down here, but this was an area to get long, or I think I've had a little here, but I found it harder and I added to it, up in this range. And then you can see, this thing really rallied almost 100% in a very small amount of time. So this thing even really almost doubled right here, and then it almost doubled again. So it just goes to show you huge upside advance, massive volume, and then you get that float higher. Now with these types of plays, you do definitely need to have sell rules, because these ones off the lows often roll right back over, but they can be quick hitters. And then ideally, if you don't really like playing these things off the lows, bull snorts happen all the time. Post earnings per share breakout is a bull snort if it's big volume near the highs. Those are ideal situations where maybe you catch something that rallies for months. So that's the bull snort scan. And Richard, are there any questions on that?
Yeah, there's a good question here from Jay. Would Oliver consider adding a filter above a moving average, like stocks above the 50 SMA or 200 SMA? Why and why not?
So yeah, I think you can definitely do that. So if you were to filter for above the 50 or 200 SMA, the nice thing is that you're likely going to get more stocks that are, above the 15 200 SMA, which is a good filter. And the reason maybe not to do that is you might miss some of these opportunities off the lows. The reason why I do like that, though, is even these are off the lows, but they're above the 15 200 SMA because they've had multiple months, if not years, to kind of build out a bottom. So I think it's totally valid. The only reason I don't do it is because I just like to see all the names that pop up on the bull snort, and then I'll use my own discretion. Like I am likely trading something that's above the 15 200 SMA, but I'll just kind of scroll through it and filter that with my eyes. But I think it's totally valid. If you find you're getting too many names on your bull snort, maybe you add a simple filter like that to narrow the list a little.
Absolutely. And does the catalyst that causes the bull snort matter to you, like whether it was earnings or news, something like that?
So yes and no. Inevitably, I do end up seeing kind of why a stock really ripped. But I wouldn't need to know the news to trade it. I actually think I often trade better when I don't know why something's happening, because then I don't have any bias. So yes and no, that's a tough one to answer, because I don't think you need to know why. But, let's say it's like a true young growth stock that's in a stage 1 base, and it breaks out on, some sort of news about an upside surprise to earnings or a new product that sold way more than is expected or something like that. That might be really good to know and can kind of give you more conviction in holding that stock through pullbacks. So I would say it's more up to you and what you're comfortable with. I don't think you need to know the news, though.
Gotcha. And just to clarify for everybody, in today's webinar, we're focusing on scanning, list organization, routines. We're not super focused on the actual setups that Oliver uses to trade it. That's more covered in webinar number 3. But to ask one question, Oliver, how often do you enter a stock after a bull snort has occurred? And would you enter on the first day if you notice it early on in the day?
So I would enter on the first day if I notice it early on in the day. I often don't, because I more scan for bull snorts after the close.
Right.
Now, the thing is, during earnings season, there are situations where I'm entering a bull snort on a gap up because I'm literally watching the stock. And it's almost like I'm looking at the post-market volume when that company reports. I already know the weekly has a big base or something like that. I generally don't want to buy a gap up on something if there's not a base, behind it. And I'll play it, and then it's almost the volume and everything is confirmed, the next day when the buyers come in and fall through higher. So it's usually on earnings when I'm doing that. Otherwise, I'm finding them just on my scans. Then as far as how I enter them, I literally get the bull snort, and I just, in both of these instances, I'll focus on this one because I think it was a smoother trade. I'll just kind of let it trade for a couple of days until I can feel like it's going to be easier. And you know what? Sometimes they just kind of keep going, and I don't chase them in that instance because I'm just not comfortable doing that. Um, I also find if they keep going, they will eventually build a consolidation. And the ones that kind of keep going can then sometimes build the most, the best consolidations. So I don't chase them. I wait for that consolidation. In this instance, we get a little bull flag. And the key is here is the volume that dries up. Specifically, this is an inside bar, which is something that I'm going to talk about on the buying session. And you can see the volume is super dried up. This is something that I really, really, really look for when I'm looking for a new opportunity, is that dry up inside bar day. Because oftentimes if you can take that out, it can lead to a move, and sure enough, you can see the volume comes in as we take it out, and that's just kind of confirmation. So little things like this is often what I'm looking for. Or maybe it's something that's longer. Like I often find on the earnings gap ups, is what'll happen is you'll have an earnings gap up with a pivot, and if it's really, really, really powerful, it'll take out the high of that pivot and just run the next day. Or I find that they will base longer and actually base out until the 20 EMA catches up. Sometimes the 10 EMA, but I think it's actually a better pattern when the 20 EMA catches up. And then it'll have like more of a base, and you can buy the break out of that base. So it's the most powerful ones. It's kind of the next day pivot high. Well, the most powerful ones are the ones you're watching where you buy the gap up, right? Or they're not necessarily the most powerful, but that's kind of entry potential one. Then 2 is the next pivot day high. 3 would be, base out into the 10 or 20 EMA. And those are more specific for earnings situations. But, maybe for a catalyst type situation like this, you're just looking for some sort of consolidation. And if you see huge, huge, huge volume on something like this, that's not earnings, it's more of a pre-announcement or something, I find it's more of a surprise than like earnings. Everybody kind of expects earnings to come. Sometimes they come in good, sometimes they come in bad. And when they come in good, people want a position. But when there's something that's totally a surprise, like nobody was expecting this pre-announcement out of Triple D, then I find they actually don't wait too long. Like if you can see in these instances, they didn't even wait for the 10-day. So you really have to analyze that volume and the price action, and that's going to allow you to find an area to get on.
And do you consider what's happening to the left of the chart, or you only kind of care what's happening after the bull snort, that the huge volume coming into the stock?
So one of the big things that I think is real important when you're analyzing charts is to look for that kind of change of character. Mm-hmm. So in these instances, the bull snort is literally the change of character. So to say that I'm not looking to the left wouldn't be entirely true, because if you were to go back and look at Triple D and SSYS, they actually kind of stopped moving higher right around a resistance level on the weekly. If you were to go look left on these. So, it's important to know that, you're coming into resistance, you're a little extended from the 10-day, maybe you take a little bit off. But I am really trying to actually trade these from that change of character day. And then naturally, if you're playing a situation where things are at new highs, it's ideal because there's nothing to the left. There's no resistance. I mean, those are the, ideal situations. Sometimes the ones that come off the lows can be more, short squeeze type plays, which is why you get that super quick move, in maybe a couple weeks, is because there's shorts that were caught and they need to get out.
And this is a good question, because you mentioned to this me in the mock run-throughs. Is the bull snort kind of your favorite scan out of these different scans that you're going to talk about today? and do you find it kind of leads to the majority of your winners, I guess?
Well, so I would say the majority of my winners come off me reviewing my lists. The
Okay.
majority of my kind of quote unquote like more holds, come off me literally just looking through a couple 100,000 charts and finding the ones that I like. But I would say the bull snort from a scan perspective is definitely my favorite scan. I think volume is by far the most important thing you can scan for, without a doubt. And I would say a lot of my kind of quick hitter swing trades come off the bull snort scan.
Perfect. I think we can move on to the next scan, but great questions, everybody, in the Q&A section. And if everybody could make sure to put their questions in the Q&A section rather than the chat, that helps keep everything organized and make my life easier and make Oliver's life easier as well. So thank you for all the awesome questions.
Okay, so next is gappers. So a couple things here. Not all gaps fill. Definitely not. If you really read about technical analysis, you got breakaway gaps. You've got the gaps kind of in the middle of the move, and then you've got exhaustion gaps. So if you can find a gap out of a base and there's volume, oftentimes those things are going to extend to the upside. So breakaway gaps can be a precursor to an extended move to the upside. This can overlap and often be a bull snort. And it can be for reasons like earnings, FDA approval, the pre-announcement. The key is right here, surprise. Anything that the market wasn't expecting or didn't know was coming, any type of surprise where somebody's caught, street caught off guard, Fidelity or T. Rowe Price is underpositioned in a growth name where the numbers came in way higher than they expected. Or maybe a short seller thought a company was, going to zero, and then all of a sudden they surprisingly turn a profit, and that short's like, oh my God, and they got to cover their shares quickly so the gap doesn't fill. Those are the types of situations you're looking for. So pretty simple. Again, price over $20, over 500K, and I'm looking for a gap up of 3%. Really, I like to see even bigger gaps. The bigger the gap, the better. I mean, you get like a 10% unfilled gap or 15% unfilled gap. That's great. I just do 3% because, I don't want to miss anything. And again, if I see just like a little gap, I'm going to use my discretion, maybe not pay attention to it. But sometimes when I'm doing my actual scans, just of, running through the stocks that I like, a little gap that goes unfilled on a name that maybe most people don't even notice can be just a subtle clue. So that's something that I would kind of put in your back pocket when you're looking through your watch list, is just little gaps that go unfilled. I'm not saying run out and market order the stock on the open or anything, but pay attention to that stuff, because there's a reason why that gap didn't fill. And it's because the buyers were strong enough to keep it unfilled. So in addition to just this scan, it's something that I definitely incorporate to just when I'm reviewing my lists. So this was a trade I took last year. Actually took this twice. So SFIX gapped up, and I think I played this off the intraday chart the next day, and I caught this move, and I really thought this thing was going to just keep ripping higher. But it ended up coming in, and I sold it in here. I think probably down closer to the 10 EMA when it just didn't close well. And for me, that's kind of like a failed trade, like it's a winner, but whenever I see something like this, I think that, I caught on something huge, but when it doesn't work, I just get out of the way. But then is really where I did well on this trade is I caught this here. Kind of same deal here. It comes down under the EMAs. It builds what I call, this is not a bull flag, but I call it bull flaggish. I like these little just, descending type patterns. Maybe it looks like a descending channel on the hourly or something. And same deal. If you look down here, what do we have? We have massive volume or light volume, massive dry up is what I was going to say. and it's an inside bar. So you're going to notice that theme for me a lot: light volume, inside bar. And sure enough, we get the explosion out of it. And literally in like 2 weeks, this thing was up, like 80-90%. And I actually thought this was going to go a lot higher. But once we lose this little trend, once the momentum's gone, I just kind of get out of the way. That's just my style. But this was just an example of something that you found on a gap up. And one thing I'll always say is they don't always go right away. Like in this instance, it looked like I wanted to go, but really the real trade set up a couple weeks later. So I recommend keeping a list of gappers, or you can put your bull snorts or gappers on the same list or something. And it can be something that you review each night as part of your routine. And maybe in here you're not paying attention to S6 at all, and then you see this little bar and you're like, oh, that's interesting, but I'm usually not just going to buy on a bar like that. But then in here, you see the drop and you're like, okay, I'm going to put this on my watch list, or I'm going to set an alert up here, and you buy through here or something like that. But I think it's good to keep that gappers list and just review it every night, because sometimes these things may not set up for a month or two after they have that gap up. But then you can catch a nice rip in a couple weeks time.
There's a really good question, Oliver. I forget who asked it here, but do you care about the close of the gap up day, whether it closed strong or sold off into the end of the day? And also, do you care about the percentage of the gap, and also obviously the relative volume on that particular gap up day?
Yeah, so one, I want to see the big volume. So this was a bull snort as well, and that's often going to be the case. I do care about the close, in the sense that if this were to close like all the way down, like let's say it opened here and it traded down to here and closed on the low of the day, and the gap started out as a 40% gap, but then it's like an 8% gap by the close. To me, I'm going to say, oh, like the news was good, but it didn't really get supported. It kind of faded. So I'm still going to keep an eye on it, because sometimes those can kind of turn the next day. And then you're like, oh, okay, maybe they just took a day to step in. But something like this is fine. I mean, we gap up and we close a little bit lower than where we opened, but overall they supported it pretty well. And as far as buying it the next day or something, you kind of have to use your discretion. Often I would expect this to build out for 2 to 3 days. So there's no hard rule on that. You just kind of have to use your discretion as to when you play it. But yeah, you don't want them to gap up and then just fade all day long and close on the lows. Those are definitely situations where I would be a little bit more suspicious if it's going to work or not. And I wouldn't be looking the next day to play it long. Even if I saw it start to trade up, I would probably still rather wait and buy it higher, just because of how it traded on that first day.
Absolutely. And similar to the bull snort, do you care kind of how much overhead supply the stock has relative to this gap up? And do you also look to the left on the chart? Yeah.
Yeah, so I always prefer stocks that are trading at new highs. Always. Like that. Everything I do, I'd rather play something that has no resistance, for sure. But I do think you can catch a quick trade off the lows. Now, if something does have resistance to the left, I'm definitely treating that as more of a swing trade. Like I'm treating that as something where I want to be more aggressive and peeling my profits. Especially if it doesn't have things like big earnings, big sales. It's not like our prototype, top dog growth stock. Because again, some of those moves can just be squeezes, but they can also be some of the best ways to make a high percent return in a short amount of time. And this is not like, maybe I have my 8 cores, which are those, vanilla names at new highs, breaking out of bases, and I'm peppering in, 1 to 2 swing trades like this, or not really like this, but like those triple D trades around it, that can kind of just add, kind of alpha to what you're doing. And I don't take a ton of these each year. It's just the fact that if you can catch 3 to 5 of these, like literally in a whole year, and they move so quick in such a short amount of time that they can really, really help your account. So when you can find the ones that are going to work, and over time, as you get more experience, if you can focus on those ones, great. But a lot of these big gaps are going to be at new highs. I'll show you a couple examples that I'm looking at right now, kind of at the end of the session, that are all at new highs, like things like Perry, PERI, or ENPH. These are all names that are gapping out of bases at new highs. Those are the types of situations where you may be on like a real nice new growth stock that's just kind of being discovered.
Perfect. Yeah, I think that's all the questions I saw about gappers.
Okay, cool. So then strength, I think this is, fairly straightforward. Over $20, over 500, and literally I'm just looking for a stock that's positive. And I am not running this scan on a day the market's up 1%, because you're going to have thousands of names on it. I'm running it on the days the market's down. And the more the market's down, the more excited I get about running this scan. The market's down 1% and I can find a name up 2% with no news or no real reason why it should be. That is awesome, because it's a sign like, okay, there's no earnings, there's no news, there's no reason this should be up. Oh, it's up because institutions are buying this stock. And I want to pay attention to that. So again, specifically during market sell-offs, so you can uncover hidden gems during market sell-offs. Look for green names when the indexes are red. And that doesn't mean you run out and just buy the stock, but you see a stock that's consistently green when the markets are selling off, it's a really positive sign. And you can see this in Zoom during the COVID sell-off. We're selling off on the index. We're moving top left to bottom right, and Zoom is moving higher. And I mean, it doubled. Like it went from 80 to 160. And then in reality, once the market pulled out of the correction, it actually shook out because, people were buying other stocks and things. But then what happened? It literally went up, 300-400% from this point. So you could have missed 100% of the move. So again, a doubler. This thing doubled when the market was in a correction, and then it went on to rally another 300 or 400%. And you could have flagged this just by paying attention to what was moving up when the market was moving down. Market's moving down, it's showing up on this list, which it was. And sure enough, at some point, once you find an area to get on board, right here is a wedge pop, it moves higher. So definitely something to pay attention to on red days, and specifically when you get a string of red days in the market and you can find a name that's on this list for a couple of those days, the light bulb should really turn on and you're going to want to pay attention to that stock.
Perfect. And I think you've got an example here with Zoom, right? Which shows super relative strength during the correction.
Yeah. So just stocks that move higher during corrections often explode higher at the end of the correction. So what I showed on the previous screen was just this little piece right here. Market's correcting, it's moving higher. But then what happens, we move much higher once the market is ready to enter an uptrend. So what the market rallied, I don't know, 50% or so last year, and Zoom, not even counting this double off the lows, Zoom went up, around 400%. So it went up about, 7 or 8 times the market. And you found this opportunity during the correction. Teladoc was another name. COVID sell-off, Teladoc was moving higher. And sure enough, it was, a big winner last year. And this happens all the time. I mean, if we looked at more small mid-cap names, I'm sure there were multiple names that did this during the COVID sell-off.
And there's a really good question here. Do you run the relative strength scan multiple times during the day when the market is down 1%, 2%, to kind of see what's showing relative strength at different periods during the day?
So really is what I'm doing during the day is I'm going to go over my lists, but my key names list or my liquid institutional leaders list, I'm scanning those nonstop all day long. And I'm looking for relative strength on those lists. I'm sorting them by percent return. And then I'm also looking for something I'm going to show you in a little bit where, maybe on the intraday chart, I see the index is making new lows and whatever, I'm looking for stocks that aren't, which it's shorter time frame. It's very subtle, but that's how patterns are built, is stocks that, they rally up a little more when the index, has their morning rally or whatever. And then the index sells hard and it comes down, but it doesn't make a new low. I'm looking for situations like that all day long. But really on the names that I've kind of pulled out on my weekend work. But I think it's totally valid. I think you could definitely be running your relative strengths again like this during the day for sure.
Perfect. I think that's most of the questions I saw on the relative strength. But in general, I think you wanted to touch on this as well. What kind of market caps are you mainly focused on in terms of opportunities?
Sure. So I tend to probably trade more higher market cap stuff, because I like the way more liquid names move. I find that bigger institutions are playing in them more because there's more liquidity and they can put their positions on. So it's hard for me to put a hard market cap on it. Two of the names that I think are leaders of the market right now are NVIDIA and Tesla, and Tesla's $1 trillion company. So, I trade bigger caps, but I do think that a lot of really nice big winners, start out, somewhere in that, maybe $2 billion to $25 billion range. So I keep a wide range. Fastly was a name that I really did well in last year, Livongo, and they were certainly not $1 trillion companies. They were probably in that $5 to $10 billion range when they got moving. So, I always think about the market cap in context of what the company does. So if I'm looking at a $100 billion company and I don't really see a huge runway for it to get to, 500 billion, I'm going to take it with a grain of salt. Whereas like Tesla at $1 trillion, I personally think it could be 5 trillion. So, but that's just my discretion. I'm not a fundamental analyst or anything like that, but I use my imagination. Whereas a company with maybe a $2 to $5 billion market cap, if it's got a big enough theme, a big enough story, if I can really see tons of people using it, like Zoom, for example, was something that I just saw everybody in sales using, outside of COVID. And then it, got this COVID thing where everybody had to work from home. I mean, it was obvious. And to me, it wasn't out of the question to see this thing have, $100 billion market cap based on the fact that literally everybody who's in sales, and then also people who wanted to stay in touch with their grandparents or whatever, that was a whole nother additive piece to it. So I think about the market cap just kind of within context of where I think the company can go. I think a couple things that you want to look for in a growth stock, and I'll talk about this more in the top dogs, is, does this have potential to go viral from a consumer standpoint? Because I'd rather, 100 million people using my product a little bit at a time. I'd rather that than, some company where there's like, 10 enterprises that are going to use it and it's going to be a higher ticket item. Just because I think those more consumer pushed products, those are the ones that can really, really grow their revenue.
Perfect. I think that answers that question excellently. And there's a question here. I'm trying to find it. People notice that a common criteria for yours is over $20, which you talked a little bit about. It makes things more liquid, more than institutions, but also people are asking kind of how you incorporate fundamentals with these price and volume scans.
Yeah, so I'm going to go over how I think about fundamentals when we get to the top dog stock.
Perfect.
So I'll just kind of table that until we get there so that I'm not, double dipping. But I would also say a lot of the times I'm trading like $100, $1,000 stocks. It's just something to keep in mind. 20 is like the minimum. Pretty rare I'm trading a stock that trades at $20.
Great.
Okay, so I wanted to just really show how you can look for relative strength, with your eyes. I mean, you can run all these scans and stuff, and that's great, and I do it. But the key is to be able to really see it. And one of the main ways you can see relative strength is by judging lower highs and higher lows relative to the index. Another way is to be looking at, where a stock is set up on the moving averages. So let's say the indexes are correcting and, you've got some stocks pulling back to the 50-day. You got other stocks that are only pulling back to the 20-day. Your strongest stocks are only pulling back to the 10-day. That is a simple visual filter. The ones pulling back to the 10 and 20 day are stronger than the ones pulling back to the 50-day, right? So that's like a very easy way to see relative strength. Now, when you get into bigger corrections, something like a 15 to 20% sell-off, which those should be the corrections that get you really excited, because those are the corrections where you find just massive new winners that are new. They're new. No one's paying attention to them. This is the way that I'm really looking for relative strength right here. So this is just like the index on the left, or, some sort of underlying. And then this is a stock on the right. So we come down and that stock may come down and it moves back up with the index. So like these are literally replicas right now. But then the index comes down and it makes another lower low. That's C. And the stock that you're paying attention to makes a higher low. That's key. That's very, very key. And, you just as an observer, somebody trying to find opportunity, the light bulb should kind of go on. The index is making a lower low. The stock that I'm paying attention to is making a higher low. So the sellers were not able to push the stock down. Institutions came in and supported this at a higher price than at point B. And then is what you'll see is when the index eventually puts in a higher low, that stock has often built a pattern out. And when you buy it, it'll usually outperform. So I want to look for situations, and I do this off the intraday chart, the 15-minute or the hourly in names that I'm paying attention to every day, where as I see the index make a lower low, I'm looking for those stocks that make a higher low. I think it's one of the absolute best ways that you can really assess relative strength, because it is what it is. I mean, you can't, it is what it is. The stock literally made a higher low and the index made a lower low. It's a sign that, buyers are supporting that name. So I think it's something that you should keep in your toolbox. Probably one of the most important things you can do is look for situations like this. When we're in corrections, go study all big winners, in my opinion, and I bet you'll see this take place. I've done it actually, and I'm, I'd say 99% of the situations you see things like this happen. So any questions on that, Richard?
There are a few, but most people are just saying like this really helps put things in perspective. Some people are only looking at percent drop versus the index, but the higher lows kind of reshifted how they were looking at things.
So one thing I would say on that is that, so like most growth stocks are going to, even if a name is holding up, better than the index, there is potential that it percentage wise drops more than the index just because it's more volatile. But it may actually be showing relative strength. Like it may actually be building proper structure like this, but it's off a little bit more. So if you're strictly doing it on percentage and you're not analyzing the actual structure of the chart, you may miss some of the best opportunities. So just, something to take into account.
For sure. And we talked a lot last webinar about multiple timeframes. Are you doing a similar thing on an intraday chart when the indexes are declining and pulling back intraday to look for those divergences, the stocks that are holding up better on that particular day?
Absolutely. So I'm going to go over kind of how I build my lists. I have a list called the daily list, which is, the 30 or 40 stocks coming into the week that I think look, they look reasonable. And I'm looking for situations like that where maybe the index pulls back intraday. Maybe it's nothing. Maybe it's, pulling back, and, the stock on my daily list is building a little bull flag as the index sells off. Like, that thing could rip out of that bull flag. And maybe it's something that wasn't on my focus list for the day that I take a trade in. And, I'm doing that all day long. I'm just flipping through my lists. It's hard. I often don't even take breaks during the day because I'm just like totally flipping through my list nonstop, looking for relative strength, looking for higher lows, looking for stocks that are, bucking the trend. I love it when the index sells off in the morning. I love it. I love gap downs, because I can kind of find that needle in the haystack that's holding up better than the market. And, sometimes you get involved in it and it moves up and it's just not quite ready yet. And you can take it off at, maybe a scratch or a small winner, but you were able to find that, opportunity to do that by just assessing relative strength intraday.
And some people are noticing that, and when you've shown Thinkorswim, you don't have a relative strength line, which kind of shows the trend of relative strength and shows us in a different way. But you've kind of trained your eyes to just look at the chart and be able to see that relative strength without needing that line. Is that right?
Yeah. So, I know people use the relative strength line from IBD. It's not something I pay attention to at all. Now that I bought MarketSmith, I'm going to try to start incorporating it more. But the one thing I can tell you is if you look at the IBD 50 and stuff, sometimes the RS line will be at 99. And when I look at the stock, I'm like, well, I wouldn't touch this thing with a 10-foot pole right here. So I think if you can learn to judge relative strength yourself, it's going to be much more helpful to you than the RS line. With that said, there are people that use the relative strength line strictly and have massive success with it. So it's certainly something that I'm going to be starting to potentially incorporate more, but I'm definitely not going to, buy a stock because the RS line is at a 99. I'm going to judge it for myself. And, and that's because that's what I've been doing for 10 years. And I would feel uncomfortable just buying a stock because the relative strength line is high.
Right. And back in my first interview with you at the beginning of this year, you mentioned also how you noticed Tesla hadn't broken the 200-day when the market had. Is kind of, if the market is below moving average and a stock is holding above that moving average, is that also another way that you kind of determine relative strength?
Yeah, absolutely. I think that seeing where a stock is, if the index is pulling into the 200-day and a stock's pulling into the 20-day,
right,
that stock's stronger. Or in that instance, the index is losing the 200-day, and in those more vicious corrections, those lower moving averages are going to be tested, and that can definitely be a way that you size up relative strength.
Perfect.
And in like a normal, like let's say a normal, I hate to say normal because nothing is normal or not normal. But let's say like a 5 to 8%, correction in the index, the best names are going to pull back to the 20-day. And, you're certainly going to have opportunities where stock pulls back to the 50-day, like that Zoom example around 120, stock built a little, tightening base structure around the 50-day. But, I want stocks that are holding like the 20-day in a normal correction, ideally. Now in a more vicious sell-off, oftentimes the 20 days are going to be lost, just because the market was much weaker. However, if you can find a name holding the 20-day in a major sell-off, you may really be onto something nice.
Perfect. I think I don't see any more questions about specifically relative strength. So I think we can move on.
Yeah. And so one thing that one of my first mentors always used to say, corrections are great as long as you don't ride them down. So the thing with corrections is they have the ability to scare you and get your emotions high. But if you just look at the S&P, long term, we generally go higher. So I think the key is during corrections, rather than to get all bared up and short the heck out of the market, which, you can do that if you're good at that. But the key is to really find these needles in the haystack. Don't ride the correction down, go hunting, like look for that next big winner, because you're going to make a lot more money to the long side than you are to the short side. And oftentimes, getting all bared up is just going to cause you to miss out on some of the greatest opportunities, over the next 6 to 12 months. So let's go over an example here. Livongo, I say here, relative strength is a springboard for higher prices, and no doubt about it. So if we look at this Livongo chart right here, so we got the NASDAQ here on the left with the QQQ, and we got Livongo here on the right. So this stock really fit the mold for what a nice big winner could be. It was after the lockup period, so I like to find IPOs post lockup period. I think that's kind of the sweet spot to really start paying attention to them. Sure, you can have names that move prior to that, but oftentimes they will wait. And then in the COVID sell-off, you can see at point A here, the NASDAQ made a new low. So we made a new low, and so did Livongo intraday, but it actually closed up. So at this point in time, that doesn't mean much to me. I mean, this chart is still pretty sloppy, and there's no tightening. There's nothing to do, but you can just kind of notice it, and it's good to know at this point. Then on March 12th, so point B, the NASDAQ makes another new low. And so does Livongo. But I think if you look at the low here in the NASDAQ, it's a little bit different than Livongo. Livongo, again, actually closes above that low, and definitely shows relative strength. So again, to me here, now at this point, I'm realizing there could be something here. This thing's really bucking the trend. NASDAQ, lower, lower low, lower high, lower low. Livongo's almost like just trading flat. That's a pretty positive sign. Then at point C, NASDAQ again, lower high, another lower low. So we're making lower lows for sure. The index is definitely in a downtrend. And as you guys all know, I mean, this chart looks pretty orderly right now, but at the time, it didn't feel that way. I think most people would recognize stocks were just getting smoked left and right through here. So you're also taking into account a lot of the other names in your watch list are just getting crushed, and this thing's holding up. Now, we do have this shakeout here at point C, which, that's going to happen when stocks are building bases. So it makes a lower low. And, at this point, you may say, oh, maybe it meant nothing, because if it all of a sudden falls apart and just starts trending lower, then, it's just what you were analyzing here just wasn't correct, and that's fine. But what happens at point D, we scum a new low on the NASDAQ, we close higher, but Livongo clearly makes a significantly higher low again. So now again, your antenna should go back up. This thing is really building out, another higher low. Let's pay attention to it. Point E on the NASDAQ, we tick a lower low again, but again, we close higher. And that's a whole nother thing. Situations like this, maybe the selling is starting to dry up a little on the index, but the index, if we were to draw a line connecting the lows, that line's still moving lower. Whereas if we were to draw a line on the lows in Livongo, it's moving higher. So point E, we see our second higher low, which we never saw that over here. So we see a second higher low here. That should really, to you, be a sign there's something going on here. There's something going on here. NASDAQ moving lower. You can just draw a line showing it's lower. Livongo moving higher. And then when it tightens up in here, literally through this 24 area is a wedge pop. And it's really around when the market bottoms. If we look, the market actually bottomed in here, and this is around where Livongo had its wedge pop, but it tipped its hand and started showing this relative strength initially here, then it kind of shook out, but then, definitely again here, and then sure enough, we have this wedge pop, and you didn't even need to catch the wedge pop. I actually really sized up into this thing right here on the EMA crossback, right in here. But then sure enough, look what happens. This thing rallies 500%. It works up here. There really, some people, this was the traditional buy area for a lot of IBD folks, where this was like a cup with a handle. I know a lot of people played this. And then it rallies up, base and break, starts to get a little more sloppy in here. And then sure enough, it tops out on quote unquote good news with the merger with Teladoc. So this stock was uncovered here during the correction. If you just step back and look at the NASDAQ sell-off after the fact versus Livongo really barely went down. So again, on a percentage basis, if we were to look at this, it looks like it had like a 35% correction, because if you were to take this high down to here, but it judge things with your eyes. This stock held in extremely well. And in retrospect, this is actually like a double bottom base, where we take out the lows, the wedge pop is coming back up through, and the buy area is, kind of right here through this pivot high. If you want to go by the traditional IBD way of viewing things. So uncovered again via relative strength. And sure enough, these are the stocks that give you that massive upside move. So I guess hopefully we can get another big correction at some point. Hopefully not into year end, but maybe this coming February or something we can. That would be great, because then we can not ride the correction down. We can hunt for relative strength and find some nice new winners to hit hard on the upside.
Absolutely. And we've got some questions here about, do you also look for price tightness during a correction? Is that a kind of sign, another way of determining relative strength?
Yeah, I'm looking for price tightness all the time.
Yeah.
All the time. So I think you always want to see tight price action. Tight price action is generally a precursor to a move. Tight price action is just a sign of a decline in volatility, which is, something we always want to see prior to a stock moving higher.
And there's another question here that was pretty good. Was Livongo making a 52-week high before the NASDAQ started selling off, or that history does not matter? And also, do you watch for 52-week highs during market corrections?
So you definitely want to watch for 52-week highs during corrections for sure. Because, if a stock's making highs and the index is making lows, that's a great sign. So for sure there. As far as did Livongo make a new high before the NASDAQ, I would have to look, but I would definitely, yeah, it had to have for sure. Because, I doubt the NASDAQ, we'll look when we get into the charting software, we'll look, but yeah, this definitely made a 52-week high before the NASDAQ. And as far as, I think the other question was, do you like stocks that make a 52-week high before the correction? It certainly doesn't hurt. So I can tell you that I actually bought this, I'm going to call it a breakout, but it didn't work. I actually bought Livongo here and got stopped out of it. I actually got stopped out here, luckily before the gap down, just because the market was just not right. But so this is a stock I was already watching. Because it was actually really showing strength in here. And, then it just kind of succumbed to the market weakness. And then when the market so this wanted to go higher, in my opinion, back here, but the market held it down. And then when the market was ready to at least stop going down, that's when it exploded.
And there was a question about why Livongo was on your radar. What scan picked it up? What list did you have it on?
So I'll talk about that. I keep an IPO list. So let me just table that until I get there.
Sounds good.
Yeah.
Perfect. Yeah, I think we can keep on going.
All right. So doublers, very simple. And actually, there's definitely a better scan you can run here, I think, which I'll talk about. I've just been using this for so long. Stocks that double are the ones that double again. Over $20, year-to-date performance plus 100%. That's really it. I've seen some people on Twitter use a scan where they just show, actually, I got this from Eve Bobak. She looks at the bottom of the correction and the percentage off the stock's bottom, which I think could be a really good scan too. So I'm looking to kind of make something like that. I think either are both valid, but yeah, I like to see stocks, you get a month or so into the year, sometimes actually this is a good one, maybe to lower to like $15 or so, because, maybe you get a stock that goes from, 10 to 20 and, stock doubled in the first month of the year or so. And then maybe it goes from 20 to 40, doubles again, and you don't get on it until, later in the year when it goes from, 50 to 100, that's fine. But the point is we're looking for stocks that double. It's not more complicated than that. So that's that scan.
And you mentioned that you start kind of looking at this scan kind of a few months into the year after that year-to-date performance. Give it time to double from the beginning of the year, basically.
Yeah, but that's also why I think that other scan where you're judging it versus the market low might be a better scan, because what's the first of the year? It's kind of just a date. But stocks didn't not trade in December 29th or 30th. So it's not the perfect scan. It's something I've used. I would say it's not where I get like the majority of my stocks, but again, these scans, you may run them every day and, maybe get one stock a year off the scan. That's it. But, that one stock can make a big difference for you.
And there's people asking whether you look for a 100% gain within a certain amount of time, like a high tide flag setup.
No, but again, if I see something on here and I see it make an advance in a quick amount of time with my eyes, then I'll certainly judge that differently than something that maybe ground out 100% gain over like 6 months. So all these scans I'm filtering with my eyes by looking at the charts.
Perfect. And people are asking for doublers, how do you decide if it's early or late within the trend?
With my eyes, just looking at the weekly, looking at the monthly, kind of seeing where it is. There's no filter for the well-trained eye. Yeah. It's more important than all these scans.
Yeah, and we discussed in the first webinar, like multiple extensions on the weekly, that type of thing. So yeah, 100%. If you're confused about that, go ahead and rewatch webinar 1, which is archived in the course. So I think that's all the questions on this. Yeah, I think that's all the questions I see.
Okay. So 52-week highs, I don't feel like I need to go too in depth here. I mean, I'm just looking at what stocks are making 52-week highs. Kind of already went over why, get a feel for what sectors are moving. You can add these to a list and filter those lists with your eyes. Sometimes a stock will make a 52-week high, but it's extended. It's not buyable. But then, 2 to 3 months later, it builds a base. And if you've got it on a 52-week highs list that you've kind of built over time, you can go through that at night and find an opportunity. Then I'm going to go through my lists. And to me, this is really where I find my opportunities, because like I said, I don't think there's any replacement for the well-trained eye. I'm sure there are people who run scans and like literally get all their ideas off the scan. I build lists from my scans, and when I go through those lists, that's where I find my opportunities. So what are some of the lists that I build? So I have something I call the IPO list, and I literally just pay attention to the names that IPO. I'll give you a website later that I use, and I use my discretion to pull names out of that, and I just add them to this IPO list. And it's got hundreds of names on it at this point. I probably need to go in and clean it up, because a lot of IPOs tank and they're still on this list. But I just build a list of IPOs. I think you could run a scan, and a good scan would be, there's a guy that I follow on Twitter who I absolutely love his list. This guy, John Stares at Candles. he'll put out lists of companies that IPO'd within, the last 2 to 3 years, that are trading near their highs or something like that. And I'll take those lists and I'll look at all those names. I'll add those names to my IPO list, because I often find that some of the big winners break out or start their advance, in that 6 to 18 month age range. Sure, could it be 2 years or so? Sure. And that's fine. But I think that's kind of the sweet spot post lockup. But not too long. Like at Facebook, I think was about 13 months or something like that. Those are kind of the sweet spots. And if you think about some of the winners or popular names people are on now, like an Affirm certainly fits that mold. If you had it on your IPO list, then all of a sudden it has that massive gap up or that bull snort. And, that's kind of what led to the move starting. So keeping an IPO list, I review this every single night, I think is a great list and, an area to kind of farm for winners. Bull snorts, as you guys kind of know, I love volume, and a lot of the time the gappers are bull snorts. So I'll just throw them on this list. And I look at it each night. I have what I call an institutional leaders list. Again, this is kind of built at my discretion, but this is where a lot of the names that I trade live. So it's got, names like Apple, Microsoft, Netflix. It's got some of the high flyers from last year, Square, Peloton, Roku, which I'm probably going to start removing some of those names from the list because I just think they're never coming back. But it's just liquid names that have done well, names I'm trading now, like, Asan, Amba, Dokken, they'll go on this list. But it's just a list that I build at my own discretion. They're liquid, they're quality names that I know institutions are looking at. I would say this list is anywhere from, 60 to 100 stocks. And you do need to go in and clean it up, every, maybe once a year, go in and clean it up and just, for example, if Roku misses earnings and trades down, I'm going to take it off the list. I just took Twilio off the list this past week. So that's a list that I value a lot. Then my daily list is a list that I build going into each week. And a lot of the times the names are the same as the previous week. But it's really, if I go through and I look at monthlies or I review the Growth Stock 250, or I just do all my work that I'm doing day in and day out, it's like the list of 30 to 40 names that I think, show potential or I want to keep an eye on. Maybe they're not all set up, but for whatever reason, I think they're building out. For example, names that I don't think are set up right now, but like Roblox, for example, I think has the potential to be a big winner eventually. It's got a lot of work to do, but if it ever gets it together, it'll be a stage 1 IPO base. So like that's on my daily list. I'm keeping an eye on it every day. I'm watching how it trades. I'm studying the price action. I like to know my names and be familiar with how they move. And by having a daily list of, 30 to 40, quote unquote, good names, I can start to get to know their character, well before I'm ever even trading them. Then next would be the focus list. So coming into every day, I have the ideas that I may trade. Like it's that simple. If I think something's actionable, if I like the chart pattern, if I think that there's a actionable trigger, some days this may have no names on it. Some days it has 2 or 3. Some days it has 3 to 5. I'm usually not putting too much more than that on there because, it's tough to, buy 12 names in a day. So I want to keep it small. And then maybe if there's like 1 or 2 stocks that I don't think are quite ready, but that I'm really just like, I want to make an emphasis to keep an eye on the name, I may put it on the focus list, just knowing I'm not going to trade it. But, I just, for whatever reason, I really want to keep an eye on it. Then lastly, I have a list called the top dogs list. And this is my most important list, I think. It is a maximum of 10 names. I sometimes stretch it to 12, but I really, my goal is to make it 10, because I want to try to decipher what I believe at that current point in time to be the absolute best names in the market. And I want to force myself to keep the list small, to keep it to 10 or 12 names. Because in reality, when I start getting over 12 names in my account, it's usually a sign. And it's funny, Richard and I were talking, and last week I told him I had more names than I wanted, and sure enough, we got that shakeout day. Usually when I get more than 12 names, I'm about to have a bad day. I'm trading my best when I have, 6 to 10 names in my account, and I'm I have bigger positions. I'd rather have bigger positions in the top dogs than own like 20 names. So by having the top dogs list, it's not necessarily, it doesn't mean that they have a buy area. Maybe it's a name that I missed, but I still think it's a top dog. And I want to be really, really focused on those names so that when they do set up, I don't miss them. Like, it's key. I want to be on the top names in the market, no questions asked. Then lastly, and again, this is something that I'm learning. So there's definitely better people to learn about MarketSmith from. I think Richard's done some great videos on how to use MarketSmith, and I try to watch those. But reports, stocks, technical, if you follow those steps in MarketSmith, there's some pretty cool little filters, top 150 earners, top 150 relative strength. I like the accumulation distribution rating because it's literally just kind of showing, what people are buying. I think the most important list I would care about would be something to scan for revenue growth. I think it's the most important thing to look for. And I'll kind of talk about that. But I wanted to break down more what a top dog is, because this is what's really, really important to me. And these are the names that I really like to zone in on. So a top dog, what's best in breed, right? We want to trade, purebreds, not mutts. I love mutts. I love all dogs, but just as a point of emphasis. So one, we want relative strength. Like, a top dog is not going to be a stock that's underperforming the market. Your stock should be outperforming the market for sure and be showing relative strength. That may even be, the most important element, because who wants to trade a stock that, has big earnings and big sales that's underperforming? I don't. Big early stage base. So if you haven't read How to Make Money in Stocks, read How to Make Money in Stocks, and kind of learn about the different stage bases. So I am not one of those people who thinks that a stock, can't still be a big winner after it's stage 3 or stage 4 base. I mean, you go say like, hey, I don't buy anything after a stage 3 base. Okay, well, Shopify's had like 9 bases. Like, you would have missed the last, 1,000% or whatever. However, once a stock has had like a stage 3 or stage 4 base without like really having that 20 to 30% market correction that truly resets everything, I am, a little more careful in how I'm analyzing that stock. So like a top dog, I want to be an earlier stage stock, often an IPO breaking out of a stage 1 base in that 6 to 18 month range. And the reason being is because it's undiscovered at that point in time, which means institutions, if they put in good numbers and the thing is, delivering on what they say they're going to deliver on, institutions need to buy the stock. Whereas something that's, stage 3 or stage 4, a lot of institutions already own the stock. And the most important thing about buying and selling stocks is, stocks go up when there's more buyers than sellers, and they go down when there's more sellers than buyers. Therefore, stocks top out when there's nobody left to buy, and they bottom when there's nobody left to sell. So if you're trading like a stage 3 or 4 base or something like that, and everybody's already bought it, it doesn't really matter how good the earnings are, how good the sales are. If there's nobody left to buy it, it's not going to go higher. So I like to focus on those early stage situations. Then 3, big volume. again, I don't know how people say volume doesn't matter. I don't think you're ever going to find a stock that really advanced multiple hundreds of percents that didn't have positive volume signatures in its base. Big theme, this is maybe the secret sauce, kind of the art of finding winners is how you analyze and think about the theme. So a couple of questions I like to try to ask myself when I'm thinking about a company, is this disruptive? Does it make sense? Is it complicated or simple? Because again, I think the best growth winners are the ones where consumers take the company viral, like millions, hundreds of millions, hopefully, of people start using that product. And most people like simple things. So therefore, like the concept or the theme behind what you're trading, should make sense to you and you should be able to understand it. Sure, these crazy, insanely complicated, techie galore type situations happen and they work big. I don't think the average person's going to know what Cloudflare does. It's still a big winner. You're going to have exceptions like that. But then you're going to have the Dutch brothers, where it's like a coffee shop and, you're seeing them pop up on the West Coast and it could grow. That's something simple that you can understand, right? Or Zoom. Hey, everybody's literally using this product. Peloton, like everybody's like girlfriend or wife was on Peloton and loved it. It's right there. It's right there. It's the Peter Lynch, buy what you know, something easily understood. So from a straight up fundamental standpoint, definitely looking at earning and sales growth. But I think by far, without question, the number one fundamental criteria for me is sales or revenue growth. And the reason being is companies that can generate enormous sales or revenue growth, they're selling, they're growing, they're taking market share. And go look at some of these names, like Amazon, technically had no earnings for like 10 years, and it went higher because they were reinvesting all their growth back into scaling and growing the company more. And then eventually, they were able to, scale that back a little bit and start to generate positive earnings. So I don't think every company needs, positive earnings, but I think they need massive revenue growth and then a runway to have positive earnings. We don't just want to be trading companies that, they grow quickly, but you're looking at it and you're like, this thing is like never gonna have positive earnings. So sales growth is hugely important. I know two names that I traded last year that had huge revenue growth. Zoom had massive triple-digit revenue growth. Zillow had massive triple-digit revenue growth. And they were both big winners. I think if you read the O'Neill Disciples book, he talks about how, I think, I haven't read the book in a little, but he talks around, around the internet bubble, they really started noticing this theme, and that more online internet type companies would have huge advances based on massive revenue growth, even when they didn't show, the earnings growth you typically would look for. But then, down the line, often like when they topped out, they started showing earnings growth. But with that said, earnings growth is key. I mean, if you can find a stock that has big sales and big earnings, that's ideal. The one thing that I would say, and I learned this when I traded institutional sales from a fund manager, you want to avoid situations, and sometimes you'll see this in cyclicals specifically, where like the earnings jumps a lot, but the revenue growth doesn't confirm it. And the reason being is there's ways that you can kind of game your earnings. You can lay people off. You can cut costs. And I think that's one of the reasons why William O'Neill looked for earnings growth for 3 straight quarters, is because it's tough to do that for like 3 straight quarters. But that's one thing I would say is, maybe a bull snort off the lows on a big earnings report can lead to like a 2 to 3 week advance. But if it's just like that one-time bump to earnings, and you're not seeing the sales growth accompany it, it's probably not going to be something that extends into a huge winner. Okay, then
Can I jump in, actually?
Yeah.
Yeah, people are curious about whether you have kind of a baseline number for revenue growth, sales growth. Is there like a minimum growth quarter over quarter or year over year that you look for in general?
I don't. I like to see at least 40%, but really the higher the better. I mean, if you can get triple digit revenue growth, that's key. That Zillow and Zoom both had triple digit revenue growth last year, but I think at least 40%. I think when I do have a fundamental scan, which I'll show you guys on FinViz. I think I set it at 20% just because I don't want to miss anything. But the higher the better, and I think 40% is a pretty good threshold to try to be above.
Yeah, and going back to Livongo, I think it had 100% sales growth, revenue growth the 4 quarters before it broke out and went on the huge run in 2020. So yeah, the higher the better, in my opinion, as well.
Yeah, triple digits is really what you want.
Perfect.
Okay, then this next one is, in a way, it's discretionary. I know you can filter for beta and stuff. I definitely don't. But you want high beta and liquid. So I want names that move more than the indexes. And then I also want them to be liquid. And when I say liquid, I'm not saying, hey, the dollar volume of this stock is X, I can get in and out of it with ease. I'm more actually like literally looking at the character of the stock. If I go into a 5-minute chart and I see a stock that, trades down 2% on a downtick, it can trade as much volume as you want. It's probably not a stock that I'm interested in trading, just because I don't think it moves uniform. So it's hard for me to describe this, but I want stocks that move in a uniform manner, because I think the patterns are more predictable. And I'm a pattern trader, so I don't like trading stocks that rip up 10% and then the next day they're down 10%. I'd rather the stock that's up 5%, 3%, 1% pullback, up 2%, just because they're easier to hold. And I'm an emotional person just like anybody else, so I try to help myself out a little bit there. And then I do say here, find balance. And is what I mean by that is low float stocks do put in the fastest moves. Now they do it in both directions. So I'm not saying, not to trade low float stocks, but I want to try to find that low float stock that just moves more uniformly. I wish I had a better way to describe it. I think it's something that you can pick up on by literally going through and looking at thousands of stocks. I can scroll through and see a stock that looks decent, but it's got huge wicks up and down and all over the place. And I'm just flipping through that one. And it could be a great stock, but I'm unlikely to make any money in it. If you really, really love it, or if I really, really love, maybe buy a little on a long-term account or something. But from a trading perspective, I've just kind of figured this out over the years that those aren't the types of stocks I do well in. So no matter how much I love it, I typically just don't trade them. And then higher price, I wrote above $10 to $15 at a minimum for me, but really a lot of the stocks I trade are over $50, even over $100. I think that's because you can risk much less on a percentage basis. For example, Tesla's $1,000 stock. You can buy that with a 7 or 8 point stop and you're risking 70 to 80 bips, but it still has the potential to double. So I like to kind of manage that downside, and I think it's easier with those higher price stocks to do that. And I will say here, nothing against penny stocks. I mean, they clearly work huge. I see people who are up 10,000% on a year trading penny stocks and stuff. So there's a bunch of ways to skin the cat. Just for me, I find that they can be higher risk and they have less institutional sponsorship. And, if you can do 10% a month and compound that throughout the year, you can make a boatload of cash. So I'm looking for those more, higher price names where I think you could trade Google and Microsoft and do 10% a month and do really, really well. But it's also a lot easier to manage the downside on those. So it's just what works best for you, but that's what works best for me. So any questions kind of on this criteria? Because of all this, like I think finding the top dogs, this is the most important, and this is really, really where I'm trying to focus my money.
There were questions, a little bit of confusion, I think, about the high beta and liquid. Can you talk a little bit more about why you focus so much on those type of names?
Sure. So, we want names that move faster than the market, because if we're going to sit here all day and we're going to own, 5 to 10 stocks, like we might as well own names that can really rip for us. So I don't want to trade Procter and Gamble or, Pfizer. They just don't move enough. Like they just, for me now, some people, that may be their personality. And I go back and forth on this too, where, healthcare is in favor, oil stocks are in favor, financials are in favor. And, a lot of the names in those sectors don't move as much. Should I move off of the growth type names I want and trade those? And I think you can, but the thing is you risk missing that Livongo or that name that's going to go up 400 or 500% because we're just trying to buy what was moving up. And I don't know. It's like a tough thing to say. I just think one, high beta, you want names that move more than the market, because oftentimes a good growth stock or all the time is going to move more than the market. And then, from a liquidity standpoint, it's more, can I get in and out of the stock without a massive amount of slippage? And am I going to get these ridiculous shakeouts that, like, if a stock trades 100,000 shares a day, an institution can move that stock down like 10% just because there's not a lot of liquidity, and maybe they move it down so that they can buy a bunch more shares. And I want names that, one guy can't move around. If maybe that's a way to kind of critique it, I want names that, no one person can just like blow the market out one way or the other, because I just think that the price action in those types of stocks is more predictable.
For sure. And going back to the big theme part of this, there's a lot of questions about whether you look for group themes, whether you look for stocks in overall strong groups and in leading sectors in MarketSmith as they define it. So if you talk about how you look for these big themes that you see, and also whether you consider the overall strength of the industry group the stock is in.
Sure. So I'm definitely a bottom up trader. And I think that looking at industry groups, and I see people, saying, hey, this industry group went from 70 to 6 or whatever. I think that's all valid. I don't really spend any time doing that though. Because a lot of the times, maybe I can find the best stock in a group when the group's at 70. And by the time the group's at 6, that stock's rallied 100%. So I am more focused on individual stocks. With that said, I'm looking for like overall themes. So like, I think, an overall theme here is, we're seeing disruption in the financial sector. We've got the buy now, pay later type thing with the Firma. I think Sophie is a stock that potentially could be a big winner. I think it totally disrupts what some of the big banks are doing. So, if I can find a couple names that kind of fit into that theme, I'm definitely paying attention to it. So, that's something. But for example, like Dutch Brothers Coffee's been like an IPO that's done really well. And, I know food stocks as a group, I'm guessing, because I actually don't know, but I'm sure that group has done better. But you're not like buying that stock because you think like food stocks are doing well. You're buying that stock because it's a, more local type brand, and you think it's going to go national, and you think it's going to explode. You think it's going to be like the next Chipotle, or, the next Starbucks, or something along those lines. And for me, I'm looking at that, I'm thinking about the theme, then I'm looking at the market cap, and I'm saying, oh, okay, this thing could really, really grow. So I'm looking at that specific stock, not the industry group. But I think it's totally valid to look at the industry group. It's certainly better to trade names that are in better industry groups. But I'm looking for those more needle in the haystack type stocks. And, sometimes you might miss them if you're strictly focused on the industry group. And one thing I'll say that's not on here, but I think like a top dog, it may pay zero attention to the market. like go back and look at Tesla last year. There were moments where the market was going higher, and like you could say Tesla was showing relative weakness, but it was really just doing something totally on its own. And I think that can actually be a sign, especially when one of these IPOs is in its stage one base, that you should pay attention to it. Where like the market's selling off and the stock's showing relative strength, or the market's going up and the stock's like looks like it's showing weakness, but it's really just like trading entirely on its own. Like I almost think that that's a sign, like, hey, this stock has a mind of its own. And then when those things do kind of, turn on the engines and start moving up, those are the names that can just move up like literally every day almost. So that's like another little subtle thing. I don't think there's any way to like scan for that or anything. It's more of a feel type thing. But that's something that, subconsciously, I guess I kind of notice.
Perfect. I think we can move on. I don't see too many questions about this slide.
Okay. But guys, I can't emphasize enough, like, this is like really what I try to do is find these top dogs and find a way to get on them. Just stay with them, stalk them, stay focused on them. That's really my style. Okay. So weekend routine. And again, like you gotta love the routine. This is stuff that you got to do. So I don't do this every weekend anymore, but when I was learning, I definitely did this, and I highly, highly, highly recommend going through some sort of A to Z or big list of stocks, because without you even noticing it, you're going to pick up and learn how stocks move by looking at thousands of charts. I definitely do this at least once a quarter. I would say I probably should do it every weekend. But just with a kid and stuff, and it's hard to find time to do that. But for me on Thinkorswim, I review the Russell 3000. They used to have the Wilshire 5000, but it's just not there anymore. But basically find whatever list works for you that has thousands of stocks on it and go through it. And I would say go through it looking at the weeklies or the monthlies. Find good monthlies, write them down, and then go through those monthlies on a lower time frame, and just filter it down until you can kind of build your daily list of 30 to 40 names. My mentor literally does this every weekend, and if he doesn't do it, he feels totally off on Monday. And I'm not even saying that he's buying all the names that he finds in here. It just gives you a great feel for the overall market, just in general. If the market's in a correction, but lots of names look healthy, maybe just a little ahead of themselves, you'll pick that up when you go do a review like this. Often when we go in a correction is when I definitely start doing this. Then I always look at my liquid institutional leaders list. Some of them I view as kind of beat up and of no interest or whatever. But some of them are the names. Right now I think the 5 liquid leaders of the market are Tesla, Nvidia, Google, Microsoft, and Netflix. Am I trading all of those? No. Do I own some of them? Yeah. But overall, I'm looking at this list. This is often where I find some of my winners because I've traded them before and they've worked for me before. And then maybe they just needed to consolidate or rest. Once they set up again, I'll pick up on them on here. Then this is the main thing I actually, well, it's probably the second main thing, but with MarketSmith, I love their cell phone app. In the car, I guess I don't have in the car, I'll keep one of these Amazon Basics notepads or something, and I'll flip through the Growth 250 on the cell phone app and just kind of write interesting things down. I think it's a good list. It's got, like 250 stocks. It's kind of filtered, by some of the IBD characteristics like earnings, sales growth. And then I think typically the names are the stronger names. I'm not 100% sure what goes into the filter, but good names are on there, and it's a good list to just kind of do. I do it on the phone app. But really, Saturday morning, I'm kind of trying to have my list of 30 to 40 good looking names for that daily list. A lot of the time, maybe 75% of the names are the same as the week before. But Saturday morning, like literally right now is kind of when I'm doing this, usually even a little earlier. My kid goes down from like 8:30 to 9:30. That's kind of a good time for me to do this stuff. And then Sunday night for me, it's almost like any other weeknight, because it's the night before Monday, which is a trading day. But I am really like grilling the top dogs list to make sure that I'm focused on the right things, and I'm trying to make sure that that's up to date. And I'm kind of almost trying to challenge the list a little bit for myself. Like, hey, this is a good name. Is it really a top dog? I think X name is better or something like that. And I will actually write out on a 8.5 by 11 piece of binder paper. I'll kind of go through the top dogs and write out, what I like about it. And then maybe below it, I put a couple other names that I'm keeping an eye on. And the reason I do that is I'll just kind of reference it during the week. All that stuff's in my trading software in the lists, but it's just something that sort of worked for me. And actually, I just throw that out at the end of the week. But I'm sort of thinking that I should maybe have a binder where I just kind of keep those so I can go back and review them. But that's something that I do. I kind of do my final run through for the daily list, just make sure my 30 to 40 are good. And then I create my focus list, the names that I'm interested in. I'm ready to go. And then I've definitely got my plan set for all my open positions. I really think about my open positions over the weekend, and then I kind of make tweaks to the plan during the week. So that's kind of my weekend routine.
And how long does this usually take you?
So again, I'm not doing this as much anymore. Where again, if you're starting out, you should be doing this every weekend, like no doubt about it. It's such an important exercise. But this probably takes me about an hour. Like I'm usually doing this part, the Growth 250, in the car. Whenever we're driving somewhere or something like that. But I'm taking that notepad, and when I'm going through this, I type those names up in my actual trading software, because I feel like I get a different look for them in my trading software versus how I see them in MarketSmith. So this takes me about an hour. It might take you longer. I've been, doing this for a while, and you just get faster and faster at it. So it doesn't take me too long. This is almost kind of like my review, where I know that there's no, like, I'm not trading it tomorrow, so I can be a little more relaxed in how I go about it. Whereas this is more my, okay, like, let's go. We're getting ready for the week. Like, what are we going to do? We got what we want tomorrow. We're ready on our open positions. And this probably takes me, another hour. My wife's on here, and I know she's probably cracking up, because she'll say, oh, how long do you need? I'll say an hour. And, 3 hours later, I'm still looking at charts. So, take it with a grain of salt. I probably spend a lot more time than an hour, just because I love this stuff.
And there's a really good question that a few people asked. What time frames are you looking at when you go through these charts? And what do you mean by a good monthly?
So usually when I'm going through this list, I'm definitely looking at the weekly or monthly. And a lot of what I'm doing on Saturday morning is looking like the liquid institutional leaders list. I'm mostly looking at the weeklies here. And that's because I'm trying more and more to make sure that I don't lose sight of what's happening on the weekly and the monthly. I make a lot of mistakes where I overtrade on lower time frames when, like, literally nothing's happening on the weekly chart. And one of my goals is to trade less. And so I'm trying, and I think I definitely incorporate the weekly and monthly probably more than like a lot of people. Um, but yeah, Saturdays look at the weekly, monthly. Sundays I'm more looking at like the weekly, daily, and then maybe even something like the focus list. I might even be zooming into the hourly to just kind of see how things are set up on the hourly chart. Yeah.
And there's several people who have asked the question about if they work full time, how should they prepare if they've got limited time? Like you obviously just had a kid, so how has your routine kind of changed, and how would you adapt it to focus on the best of the best opportunities if you have only a few hours on the weekend to go through and look for those opportunities?
Yeah, so I think, if you're starting out trading, it's going to take you some time to just like build up these types of lists. So like, this is what I do. So I've been doing it a while. So I already have these lists created. And I think if you have those lists created, you can go through your IPO list. And actually, I should say, I'm definitely going through my IPO list here Saturday morning. Sorry, that's not on there. Like, that's definitely something I'm doing. Really, all my main lists I'm kind of going through here. But I think like going through an IPO list and then just kind of like a liquid leader list is really all you need to do. And then kind of once you have established the top dogs, really, really staying focused there. So I think you can definitely trade while you're working full time. I almost even think it can actually be a huge positive because you're not watching the market too close. And the nice thing is too, is there's some great cell phone apps out there, like the Thinkorswim app is amazing. And the nice thing is too, you can be more focused, right? You can't look at everything because you just don't have the bandwidth to do it, which again, I think can be a huge positive. By working full time, I think the key is to stay focused on the top dogs and be concentrated in those top 3 to 10 names. And when I'm watching the market every day, if I'm working full time, I'm focused on what I have to do that day, my top 2 to 3 names, and then the positions I own, and I wouldn't be looking at anything else. And I think you might even be able to trade better if you're working full time. So view it as a positive. Think about Darvis. He was halfway across the world and debatably did better than most, if not anyone else, trading the market when he was. He didn't even see the quotes for a couple of days. So don't use it as an excuse if you trade full time. Just find a process that works for you. Stay focused. Don't look at too many things. But I do think learning, doing an activity like this, or I think a great thing that my mentors had me do is go look at, like the top 100 winners from, the last year and the year before, and go through them on weekly charts and study like how many times did the stock lose the previous week's low and things like that. And I think it'll be eye-opening to you if you do those types of things, because stocks that are being accumulated usually don't lose the previous week's low, until they get extended, and then it's natural for that to happen. But doing types of things like this and studies like that when you're learning, it's going to kind of help you train your eye as to what to look for. And that type of work is irreplaceable. I think it's unrealistic to think you're going to come in and just like make money consistently after a year or two of studying. And doing things like this are going to help you increase that learning curve because you're going to look at thousands of charts.
Well said. And you kind of sum it up. You have to love the routine, right? You have to put in the work.
Yeah, like literally my mentor's been trading for like 17 years. And if he shows up on Monday morning and hasn't done all his scanning, he'll tell you like, oh, I feel so out of touch. And I mean, this is a guy who can trade. So, even someone like that, just goes to show you that you have to find, and I don't have the same routine as him. Like, I don't have that same routine. So I think find a routine that works for you is the key. But this is, these are just some ideas of some of the different things that I do. And if you can take some of it and do it, great. And, maybe you say that's ridiculous to look at the Russell 3000. that's fine too. Find what works for you.
Exactly, and we actually have included in the workbook kind of their homework assignment today is to fill out their daily and weekly routine, and hopefully you've kind of incorporated some of what Oliver is talking about in this presentation into that. But find exactly what Oliver said. Find what works for you. Not everybody's process is going to be the same. Nobody has the same amount of time, time frame, setups. All that's going to be different. So the point is just to build a process and execute that every single week to prepare you for success.
Exactly. Yeah. So as far as my actual daily routine, it's a little different. Usually I wake up around, 7-ish or so, maybe even a little later some days. I'll kind of actually like check my phone app kind of as I'm in bed almost. Just hopefully one of my names isn't down big or something, but it happens. And if it does, usually I go right to my office just to make sure I see what's up. But I'll check my phone app, if things look, sort of normal, things up or down a little, whatever. I'll go downstairs, I'll have breakfast. I usually play with my kid for an hour. That's one of the times a day I get to spend the most time with him. Then around, 8-ish or so, maybe a little bit later, I'll, get to my desk. I trade in a room with a couple guys who are really on top of it. And, they're good at giving you the actionable news versus just like, there's always news, right? And so maybe you see a couple items that are really important that you want to pay attention to. And, maybe there's nothing. I'm not a news trader, but, certainly there's unique situations that you want to pay attention to. Then I'll usually just kind of take a break, for 10 or 15 minutes, do whatever I need to do. Then around 9 a.m., I'm kind of like back at my desk, and this is where I'm kind of getting in the zone. I'm going through a mental rehearsal as to what I want to do. Maybe there's a name I want to be aggressive on right on the open for whatever reason. A lot of the time I like to try to sit out the first, maybe call it 10 to 30 minutes. I like to let things settle, but sometimes there's a name that you need to be ready to roll on right on the open. So I want to be ready for that. And then I want to be thinking about the names that I own and how I want to treat them, kind of reiterate in my head what my plan is so that I think by doing this, you're going to make less emotional decisions. 9:30 trading the open. Usually right after the open, I go to my own list, which are the names I own, and I sort it by percent gain, like right at the open. And I'm usually looking at the red names. So the names that are down, those are the names I'm most focused on. Now, if I had a name I was looking to sell into strength or something, I've got that predetermined, coming into the open. That's part of my mental rehearsal. But right here, I'm looking for the red names because I want to manage the blow-ups and just take care of them, put out the fires. That's really like half our job is just kind of taking care of the things that don't work out. Because things that are working, like it's pretty easy to let something just work. It's putting out the fires along the way. So that's the main thing. Then like right after the open too. So as I go through all of these lists and all the work I'm doing, I'm setting alerts. Like I've probably thousands of alerts set. And some of them are just like a name that's off the radar, but if it gets to X level, I want to put it back on the radar. Maybe I've got an alert at that level or something. So alerts go off, and I have my notepad, and I'm writing them down. I don't have time to look at them all. And actually, if I were smarter, there's probably an archive of things that alerts went off, and I can just go look at it. But I write them down, and then after the open, when things settle, or when I feel like I have some time, I'll go back through and I'll type up those alerts. Maybe 10 of the alerts were names that broke out. And if I see 8 of them failed, that's a sign to me. Or maybe I see, all 10 of them just roared higher, generally a pretty good sign that the market's strong. So I can kind of use that subconsciously and trade in the names that I own. But then I'll go through and I'm checking the liquid leaders list, my daily list. And that's kind of what I'm doing all day too. I'll show you kind of how I have my list set up when we hop into the trading software. but I'm just seeing how they're trading, what's showing strength on down moves in the index, things like that. A lot of the time in a roaring move higher, the index will sell off in the morning and it will rally into the close. So if I can find those names that show strength when the market comes in, those are the names that you can kind of hit hard in the afternoon, or maybe even you get like a 10 to 10:30 reversal in the market, and that name starts moving up a little in advance of that. So I'm scrolling through those names or those lists constantly, looking for situations like that. And then I filter for the percent gainers list midday, because I do that on my Thinkorswim software. Then after the close, I quickly review the gappers, bull snorts, 52-week highs list. I run through all my lists just like I do on Sunday night. Usually takes me about an hour. I'm usually done by like 5:30ish or so, because that's when my nanny leaves, so I got to be done then. Sometimes if I don't finish my work, actually most of the time, I will come back to my desk at like 9 p.m. at night after my kid goes to sleep and just finish up what I have to do. So it's kind of after the close, then I got that 2-3 hour window, and then I come back and do whatever else I need to do to make sure I'm ready for the next day.
And there's a question about how you deal with the noise the first 30 minutes of the day.
So here's the deal. The majority of the mistakes that I make are on trades I make the first 30 minutes of the day. It is how it is. But I also find that, some of the best names just like rip right on the open because there's earnings or something like that. So one of the things that I try to do, and I'm not the best at this, guys, like I'm not sitting here telling you that I got all the answers, but I do try to avoid over trading near the open on things without a catalyst. So if there's a catalyst, like an earnings report or something, I'm going to be much more likely to trade it on the open. And then if there's just like a really good setup that maybe I thought it showed huge relative strength into the last hour, and it's just dying to pop higher, and there's like an hourly pivot or something, maybe that's something I'm paying attention to on the open. But the majority of the mistakes I make are trades I make near the open. So as far as kind of avoiding the noise, it's really just that sometimes you have to kind of take a deep breath and let that first 15 to 30 play out. And certainly if you have something moving against you or triggering a stop, you got to manage your downside risk. I will say sometimes my stop levels end up being support areas, actually. And it's tough because maybe a name will gap down like right to your stop, and it'll flush it out a little bit. And it's not an exact science as to when to give that name a little bit of room to trade or when to just head out of it. So I wish I had a better answer for you there, but you just kind of have to use experience. And also sometimes you decide to give a name a little bit of room and it's a mistake, and you should have just sold it. And sometimes you sell it and you should have given it a little room. Like, unfortunately, we work in a business where you have to make decisions with incomplete information, and you just have to try to make the best decisions you can. So sorry if that's not the best answer, but that's kind of my answer.
Perfect. I think we can move on. And for everybody, at the end of the slides, we'll be taking a break. I know a few people asked for it, but this is recorded. Feel free to step away whenever you need to. Yeah, you can just always rewatch this as many times as you want once it's archived in the course.
Yeah, so I mean, we're going to take a break now, but these are some important links. I'll leave them on the screen maybe during the break. Finviz.com, which I'm going to show, marketsmith.com, investors.com I use to look for volume run rates on the NASDAQ and the NYSE. Earningswhispers.com I use for earnings dates. Now I'm using MarketSmith for that as well. but sometimes they have different dates, and it's, you know, good to know. Then for an IPO calendar, I use this site, stockanalysis.com/IPO/calendar. I don't know if it's the best or the worst or what. I think you could type into Google IPO calendar. I think that's literally how I found this. And you can find a good list of IPOs. And then lastly, this is something that I check pretty regularly, is www.marketbeat.com/IPOs/lockup expirations. I like to know the expiration dates on some of the IPOs, just because I think after the expirations, a lot of the time is when a stock can set up for its, you know, more institutional advance, I guess is what we call it. So those are some good sites I use. And I think, Richard, when we come back, we're going to kind of, you know, look in the trading software and FinViz and things a little bit more. But I think now is a good time for a break.
Yeah, that's perfect. And as Oliver said, once we come back, we'll be walking through live FinViz, TOS, talking about all those lists and kind of seeing how Oliver applies it every single day. So with that, it's right now it's exactly 1 o'clock. We'll come back at around 1:05 and keep on going. So thanks, and we'll see you back in just a few minutes.
All right, so what I'm going to start with, FinViz here. So finviz.com, pretty simple. This is the homepage, and I don't spend a lot of time here, but, you know, this kind of little list right here on the left, you know, top gainers, new highs, unusual volume, I'll kind of glance at. So, you know, BKKT, obviously a name I think some of us have been paying attention to. You know, that's something that would stick out to me. I'm already on it, so I'm aware of it. But, you know, something like, for example, this CADE $29 stock up 40%, you know, I might throw that in my trading software. Big bull snort, Cadence Bank, don't love banks, but, you know, let me look at the monthly, you know, approaching the highs. You know, this is something that maybe I'll add to a list. You know, it looks somewhat interesting. So, you know, I'll kind of just glance at this list. You know, agree, I know is a hot name Friday. A10 broke out on earnings. I've already kind of checked this one out. I just actually typed these two up, and neither of them really look of interest. This CN, you know, I'm kind of just scrolling through this real quick. It's kind of like a snapshot. You know, this I think was the top name Friday. Like, okay, we've literally got the top name, and we see it here. But then is what I do is, you can create a username and password here. So I've got my username, and then that allows you to save screens, which is really how, well, you know, the main thing I use FinViz for.
Oliver, could you zoom in a little bit into your browser so people can see a little bit better?
Yeah, is that good?
If you go, yeah, that's perfect. That's perfect. Thank you.
Okay. So what I did there is I just clicked into the screener, and then when you build screens, they save up here in your presets. So I've got some of my screens here, and I'll just kind of run through and show you how I use them. So let's say I go to the bull snort screen. So it's like 2 pages right now, which is pretty solid. The annoying thing is you get all these pop-ups with the free version, but I just deal with it. And I've got my notepad right here, and rather than type all the stocks up as I go, I like to just write them down so I can kind of move through real quick. So like when I think about this ARC, it's a REIT. It looks real good. I don't really trade a lot of REITs, so I'm not going to type that down. ALB, you know, this is a name that I'm already on. I already know it's on one of my lists, so I'm not going to write it down, but only because I already know it's on one of my lists. It's in the basic materials chemicals sector, usually not something that I'm trading. But based on kind of this chart here, you know, if I didn't already have it on a list, I would write it down. But I'm just kind of scrolling through here. So like, this is something that's real attractive. Again, I've already got it on a list, so I don't need to write it down. But I'm just kind of scrolling through here, and like, you know, stuff like this, you don't get the complete picture. But like, for example, DVA gapping down, like, this is not a bull snort I'm interested in. Maybe I could make a filter for up. But either or, I'm just kind of going through, like GREE, right? It had a big rip on Friday, but the overall chart structure for me just isn't right. So I'm not going to write it down, even though it had a big move. Whereas Lucid is something that, maybe you write down because it's got an interesting story. I think they're supposed to start delivering vehicles today. And if it were to consolidate, this is something that could be attractive. So, I would write this one down. And then I just kind of, keep going through. MTTR looks very attractive. I actually really like the weekly on this. I tried trading it last week and I totally screwed it up, only to watch it rip higher, which really sucked. But this is something that would stand out to me, right? We've got the big green volume moving higher. So like so far on this here, I happen to already be on both of these, but that's kind of two names. If you want to count BKKT, that's three names. And NATI, it's sort of interesting, but how I said like the character of a stock, see, it's got all these like weird wicks and stuff. It just like to me kind of looks like the type of name that I don't really want to trade. But I think it's worth putting on a list just to go look at the weekly, because I can't see that here, but maybe you go look at the weekly and it looks more attractive. So maybe you write that one down and don't end up, really using it like the others, but it's important to write down. Looking at these, QS, already on one of my lists. I know that it had earnings last week. This is the type of thing that I would write down. And then I'm just like literally going through it just like this. It's not something that's, taking me a whole lot longer than you might expect. I can do this very quickly because I kind of know what to look for. Like X, gap up, it's interesting. I'm just familiar with the name, so maybe I'm not, going to write it down because I'm unlikely to trade it. Whereas Zillow had big green volume. It's kind of breaking out of a weekly descending channel after putting in a pretty nice basing bottom here. I'm going to pay attention to this, and I've traded the name in the past. It's been a big winner for me in the past, so it's something that I'm going to keep an eye on. So, Zen was a name I've traded in the past, which to me, this is a deal breaker gap down. Like I'm probably not going to pay too much attention to this name, or maybe I go in and I set an alert at 130 and I never look at it again until it gets to that level. But so literally just going through this bull snort scan, found 4 or 5 names that are interesting. BKKT, Lucid, Zillow. I can't remember the other one that what else? MTTR. So those are kind of 4 names that I pulled out. And then I'll just go, to the gappers list. And this is only one page. Can kind of scroll through this very quickly. The Cade is one that, we kind of highlighted earlier that, maybe you throw that on a list. This is an enormous gap. It's like a 45% gap. So kind of want to see what's up there. Maybe they got bought out and it's just going to trade in a range there forever and it's not worth paying attention to. But this is one with that huge of a gap. Gonna write down and see what's going on there. Cerner, just 2 off the lows for me, I think. This DRVN, this is something I would write down just to kind of check it out. To me, just based on my feel, because I do this like every day, I don't think it's one I'll end up trading, but I think it's one worth writing down. I already have it on a list, actually. Lucid, like I said, gappers and bull snorts, often you'll get overlap, which is very normal. So I'm just kind of rolling through here. Team, this is one that, is already on a list. It's gapping up. This could actually even potentially be an exhaustion gap, in my opinion. But that's all I'm doing. I'm doing it that quickly. So people ask, how long does this take me? Richard, how did we figure out how I do this again?
If you go up to, either charts or just overview.
Overview. So I like to look at the overview. I know Richard was telling me that he talked to someone who looks at the charts, and you can go in here and see the actual charts, which I think if that fits your eye better, like this AMPL, hello, like accumulation, right? We want to pay attention to that one. But I don't know why. I just prefer the overview tab. But that's what I'll do. AEHR, like this is one we're already on, but like that looks good. Making 52-week highs looks good. AMPL, too extended for me. I actually think I added it to one of my lists around like $65. but like this stock is being accumulated. Like this is something we need to keep an eye on. And then the nice thing about FinViz is like, I like to see the market cap, it's kind of in that sweet spot, where it's like a smaller-ish company. Like this is one we want to be paying attention to, in my opinion. I'm not going to chase it here. I wish I had bought it at $55, but I didn't. So I'm not going to chase it here, but I'm definitely going to be paying attention to this stock for sure. And that's all we're doing, active, consumer cyclical, just generally not the sector I'm focused on. AUPH, it's a biotech. I don't trade bios, but if I did, I'd be writing this one down for sure. It looks interesting. We see that BKKT again, this BRKS, a name that I just couldn't get right, around $100. So when I see it here, it's kind of kicking me when I'm down. But this thing, it looks attractive. I already have it on a list. Bros we've talked about. But so, you're just kind of scrolling through and seeing what is attractive. Costco, love it. Just doesn't have the beta for me to trade. Great one for the long-term account, I think. And that's all I'm doing. It's just going through, building lists. D-Dog was one I was interested in Friday. Den was one I was interested Friday. But Dexcom's a name I've traded in the past. Like really, I should have been on this name because it had earnings and it had a nice base going into earnings. For whatever reason, it didn't make my focus list. But, this is like, okay, Dexcom's got more in the tank here. It wants higher prices. So this is something that would probably be on my daily list of 30 to 40 names. EMPH, knew about this, posted this on Twitter. I think it had the weekly base and it has been bought up on volume. So you maybe write this one down if you weren't on it yet and you look for some sort of pullback or bull flag. So these ENTG, you could write this down. This is all I'm doing. FRSH, IPO, making a new high. Like I'm aware of this one, but I'm not on this name. I'm definitely going to write this down. Sort of like that AMPL. I want to know these names, especially when they're younger, that are showing strength. Now, even if I decide not to trade this till later, that's fine. If this stock is going to be a huge long-term winner, it's not just going to go up once, it's going to go up, it's going to base, and it's going to go higher. So maybe I catch it after that basing pattern. But you can kind of see just in looking at these couple scans, how literally we've kind of pulled out, probably like 10 names so far. InMode is a name that I own, that I found on a bull snort list when it was around $90 pre-split, $45 now. And Intuit just moves a little slow for me, but like does it because it really had a wedge pop around 540 and it's up $85. So I'm kind of using my discretion. ISRG is a name that I've liked to trade in the past. So I've got it on a list already. I'm usually avoiding these ETFs, but it's good if we're in a strong market where you're seeing ETFs on the list, right? So that's all I'm doing with FinViz is scrolling through this quickly. Writing LC is a name that I own. It had a bull snort / gap up on earnings, and it looks good. But LAC is moving. Okay, what's the other name in the sector? LTHM. That's one that I'm aware of. Oh, and sure enough, there's LTHM breaking out to highs, breaking out of a base. I think you should have been on this, but Lulu looking good. I think Lulu is on my liquid institutional leader stock for sure. And you like seeing something like that break out to new highs and extend, on volume. Mime is a name that I pulled off a gappers list here, and it just it never really did anything. So am I interested in trading it here? No, but it just, it's just like feedback that, something that you came up on one of your scans is moving higher. You always want to see that. NDAQ is something I'm not on. I hate seeing that big sell down bar there, just like the character of the stock. But, this looks attractive. I've seen ICE on here, so it kind of comes into my head. Okay, what do CBOE and CME look like? Maybe I want to look at those stocks because I'm seeing exchanges move. and that's when I'm on Netflix I think is a leader. ServiceNow, this is interesting to me because it gapped down big on earnings, and it actually got bought up and even like gapped up, I believe, the next day. So just like a sign as to how strong the market is when you start seeing these kind of name brand names like NVIDIA, ServiceNow, Netflix on the new highs list. It kind of, tells you that we're in a fairly attractive market. So that's like literally how I'm going through these. PWR was one that I pulled on the gap up list a couple weeks back. Was never able to get it going. But just kind of reiterates to me, hey, this isn't done. Maybe it moved too slow for me or whatnot. But here's one that looks potentially literally actionable for Monday, RVLV. So maybe I write that down, and now I'm going to go review that in my trading software. And maybe it makes my focus list. I don't know. I really need to see it in my trading software to fully commit to it. But it's in the right market cap range, internet retail. I think a lot of people know this stock, but it just goes to show you, just in our little run through here, we've identified 10 to 12 reasonable tandem. I think you could write down, I've already got it, Tesla. URI is breaking out. It's not the type of stock that I want to actually trade, but I know what they do, right? They rent out the little, it's like I don't know, when I grew up in California, Big Four Rents or United Rentals, like nobody's renting this stuff if we're in a bad economy. So, this is breaking out to new highs. Like that's a good sign to me, whether I'm going to trade it or not. And a guy who I used to execute for used to like trade in this thing. So just, I don't know, when I see it, I always kind of see how it's doing. But that's literally what I'm doing when I like ZS to me has been by far the strongest cloud security stock. The buy area was really down around that 265 area or so. But to see this thing continue to plug higher, like it just tells me, the market's strong. Like ZTS, I think the buy area was around 200, but same deal, to see like a trend extend. It just, it gives me a feel that like things are working. And that's literally what I'm doing. So a fundamental scan that I do run, I run two of them. So one I call the 20s scan. It's a scan I got from a guy that I trade with like 10 years ago. And it's just 20% return on equity, 20% gross margins, 20% quarter over quarter growth, 20% sales. And it's not so much that like I think a stock on here is like definitely going to be a big winner. But it just so happens that a lot of names that do end up going to be nice winners show up on this scan, at some point in time. So, kind of roll through here if I need ideas. I'm not looking at this every night, but if I need ideas, I'll look at it. Then the other one that I have is, I call it the fundies scan. And again, these numbers are lower than what I'm looking for, but I just want to try to give myself a group of stocks to look through. So I do the sales and earnings. I do the ROE. Juan looks for 15%. And then on this one, I do 0 to 10% below the high. So a lot of the time I'm doing this like in a correction or so, and I want to see the names that are like hanging near highs with these types of characteristics. I'm not really using it as much at this point in time, but those are some of the things that I do. So yeah, that's literally how I use FinViz and how I'm able to kind of run through things real quickly. I think it's an important tool. Then Earnings Whisper here. I think if you go to,
can I jump in for just a second?
Yeah.
So you've gone through all your lists in FinViz. You've written down on paper some interesting names. Then you would go through, look at their charts in TOS, Thinkorswim, your charting software, and maybe assign it to your focus list, your daily list, add it to institutional leaders. Am I getting that right?
Yeah, exactly. So I'm just writing things down at this point. So like right now I've got written down, like 10 names.
Yeah.
And I didn't write all 10 of those down because some of them I already have in my lists and I just know that. But I did write down FRSH was a new one for me. And then AMPL I wrote down again just because I want to reiterate to myself because I think it's really, really being accumulated. So I wrote that down. And then RVLV is a name that I kind of have on a bigger list, but I've never had a lot of success with the stock. So as what I did is I wrote it down again to just kind of make sure I look at it, because maybe it looks really good and I should kind of reconsider it. So those are the new names I wrote down. Lucid and BKKT I already had written down,
Right.
or I already have on a list. So that's what I'm doing here is I'm putting things on here. And here's the deal: you do this every single day. We got 3 names here, new ones. Maybe you get 1 or 2 new names a day, and maybe they never really turn into anything, but it's going to allow you to get names with the characteristics of things you want to have in winners, and put them on a list, and then look for spots to get on them. So that's all I'm doing with FinViz. It's not that complicated. We're just trying to find potential winners. So earnings whispers, I do go click here on the calendar and quickly scroll through what looks attractive that's reporting this week, and I kind of just have a feel as I recognize a lot of the names that I'm looking for, and then I'll just type the names I'm trading. I'm typing in, okay, November 10th. That's literally how I use Earnings Whisper. It's my main source to look for earnings. I also do look at MarketSmith. And then one of the things that I've started to do is when MarketSmith and Sophie have different earnings dates, I always go to the company website to just, make sure I confirm when a stock's reporting.
MarketSmith and Earnings Whisper.
Yeah, exactly. And then here, investors.com. The way that I really use this is I'm really just kind of looking at the vol run rate, specifically on the NASDAQ during the day. Maybe I go look at it like at lunchtime or something. And then they have a cool thing here called Stocks on the Move. I'll kind of check this out, filter it by volume, and you can kind of see, what stocks are really moving. So, this is another way to just see what's up on volume. Like for me, volume is the most important thing. So this VCRA, I'm not really familiar with it. So, maybe during the day I see that and I just go type it up. Oh, it's breaking out. That's the monthly. Here's the weekly. Here's the daily. That's pretty attractive. I've never charted this one before. So, maybe I come in here, draw some lines, go down to my bull snort list. And, maybe I add VCRA to the list. So, that's kind of how I might use those things during the day. But that's more or less my scanning. The other piece of outside software I'll use is MarketSmith. I'm almost sort of using this mainly for right here. I really just use this to look at the earnings. Now, I did talk about these lists. You can see I'm always open to the list, stocks, technical. And I just kind of go through these different lists, and you can click in here and you can use the space bar, and you can kind of quickly go through different stocks. So for example, like AMRC is a stock I know, which they benefit from clean energy and companies restructuring. So if I'm familiar with this one, it's breaking out to new highs. It's good to see. But really, is what I'll be doing is, let's say like Sophie's a name that I think is interesting. It's building a cup with a little handle here. I'll come in and I'll look at the earnings. This one, the earnings aren't knocking you off your seat just yet, the revs. But I'm coming in and I'm looking for stuff like that. Firm, same thing. Whereas UPST, I know a stock that everybody just did real well in. It's got triple digit earnings and sales. The one thing I would highlight here to watch out for, though, and I use this as an example a lot, is triple digit earnings and sales in September of 2020. So that's right here, right? Triple digit earnings and sales in December of 2020. That's right here. So we've got like 2 quarters, and there's probably a 3rd quarter here, and then it just explodes, right? And when does it top out? It tops out in about February, prior to its March report. It reports like triple digit earnings and sales again here, and the revenue growth is accelerating. But the reason I point this out is you can't just go straight up off the earnings and sales, as stocks top out when the earnings and sales are the best. So it's still secondary to me. And I always just like to point that out to people, because sometimes I'll say I'm selling a stock and somebody will say, oh, the earnings are huge, blah, blah, blah. And it's like, well, stocks typically do top when the fundamentals are the best. So use it as a secondary thing to the price action is how I approach it. But that's, really I'm more looking down here at the earnings and the sales. I guess here's the relative strength line. Like maybe I should be looking at it more. I'm trying to incorporate some of the things more into my process. Another thing I'm starting to try to look at more is the anchored VWAP stuff that Brian Shannon talks about. These are types of things that I'm trying to add to my game, to make myself better. But those are kind of the outside tools I use. So Richard, what I'm going to do now is I'm going to kind of hop to, how I keep my lists during the day. So the way that I'm set up is when I'm actually trading, I have a weekly chart right here. I have a daily chart right here. I have a 5 or 15 minute right here. I'll keep it at like 5 minutes on the open. Then I move to a 15-minute. And then I have the hourly right here. And I'll show you that visual in a second, but the way that I show these lists, like it just doesn't show up as well from a presentation perspective. So the way that I'm set up is I got my own list here and I'm paying attention to the stocks I own. I've got my focus list here. I haven't set this up really yet for tomorrow. But I'll give you some examples of some names on here. Like I'm keeping an eye on this Fubo. It's a name I did really well on last year. I need to clean it up. It's just kind of coming back on my radar. It's not a top dog. It's not best in breed, but it's something that could be attractive. I actually thought it was going to be a short down here, and it got bought up, and that was kind of my sign, like, maybe I should pay attention to this again. So it had a wedge pop here. This, I guess, technically is the crossback. It's kind of like a basin break, a little bull pennant. It's still sloppy and loose to me, but I'm kind of keeping an eye on it. Then this is a new story I'm paying attention to. I actually took a loss in it on Friday, just on a small position, trying to get something going, but I'm keeping an eye on it. This is one that I'm not really, I should have bought this here. This news was a layup, $3.5 billion company with a $5 billion deal. But I didn't, but I think it's powerful. So, keeping it on my focus list, same with this. But really, some of these are just names that I'm keeping an eye on. Like I don't own Microsoft, Netflix, or Google, but I think they're leaders. So I'm just keeping them on the focus list, even though I'm not really looking to trade them. This and maybe this are probably the two new actionable type things. But I haven't fully set up for Monday, but this is my focus list with the top 2 to 3 ideas, and then maybe just some other names outside of that I'm keeping an eye on. Then from there, I keep the top dogs on here. So right now, Tesla, Coin. I'll give you an example with top dogs, right? A lot of people like Hut and Mara and SI. But to me, even though one of those other names may move higher on a percentage basis, and I know that's what we're really looking for, to me, it's a no-brainer. Coin's the leader. Like if this whole Bitcoin thing works out, this is like the Google type name in that sector. So that's the type of name that's going to be on the top dog list. That's not to say you're not going to trade a Mara or something like that. You certainly could, without a doubt. But it's not going to be a top dog because it's not even, the top name in that sector for me. So NVIDIA, Net to me, Amba, Affirm, these are kind of the names that I'm considering the top dogs right now. So, I know Sophie, like, again, this is a name that hasn't done anything really other than, this bull snort down here. This is more so like the feel component to determine what a top dog is. I've read about this thing extensively. I really think it's got potential. If you look at the weekly, this would be a stage 1 base if it can ever push out over this trend line. So really it's like, if it kicks into gear, it could be a top dog. But we still need to see that happen. So maybe it's not just yet, but my feel is that it will. So I've got it on the top dogs list. So on the open, obviously I'm paying attention to the names that I really like. So let me just share one of my other side screens. So I have 3 screens, and during the day when I'm coming in and getting ready, can you see this screen here with four?
Yeah, it just came up.
Yeah. Okay. So what I do is on my left screen and my right screen, it looks like this, and I'll have a daily chart with the hourly below it. And let's say, I want to pay attention to this stock on the open, and we'll just leave it as a sound. It doesn't matter for this. I'll put those names that I'm attracted to in here, so that I'm watching them, right? Then right after the open, I come up here. Oh shoot, so that's how my side screens are. So I'll have 4 stocks, set up, 2 on my left screen, 2 on my right screen. And I'm seeing the daily and the hourlies. So that's how I'm kind of set up there. And then let me just go back to my middle screen. Sorry. And then right after the open, all I simply do is I come over and I click percent change. And if I want to filter it so the red names are at the top, so I can see what's up, what's going on. And then naturally my focus list is right here. I've got my top dogs list here, but kind of like after the open, more midday is what I'll do is I'll come in here, I'll go to my liquid institutional leaders list, and I'll just kind of start scrolling through, kind of seeing what's going on. And what I'm doing is Richard, I'm going to switch to my actual setup just so these guys can see it. So this is what I'm really looking at during the day. Richard, you see the 4. So I've got, normally during the day, I've got the weekly here. I've got the daily down here. I got the hourly here in the bottom right, and then the 15-minute. And I actually don't keep on the extended hours. So let me fix that real quick. But basically, like midday is what I'm doing is I'm coming in here and I go to this closer daily time frame. And I'm just kind of like scanning, like, okay, the market's down, what's up the most, why, how's it trading? And I'm flipping through names like this all day. And I'm so focused during the day, I have to set an alarm to get lunch. And I would say I probably only get lunch about 20% of the time. And I usually have a huge headache at the end of the day. I'm not saying you should do that. But that's like what I'm doing all day is I'm rolling through this liquid institutional leaders list. And sorry, yeah, you can, great. For some reason when we were filming this, it wasn't showing this when I was on the setup. So basically then is what I'll do is so my daily list is right here too. And I'm scrolling through my daily list. These are the names that I think are potentially attractive. Just overall, I kind of want to see how they're trading. For example, this Mara, right? It's not a key focus really because I'm on to coin, but if this could build out under here a couple of days, maybe this ends up on my focus list and I buy a breakout of this little pennant here. So that I want to see how it trades. If it sells off, I'm like, oh shoot, Mara's not really going to build out like I thought it would. So that's the type of stuff that I'm just kind of looking for as I scroll through this. So like, for example, Friday, I wasn't on Etsy, but I saw the bull flag pattern coming into the day and it's trading really strong. Like, that's just like a good sign to me. Perry, guys, by the way, I really like this Perry. I bought it Friday. Bull snort right here, showed up on my radar, pulled back. This moving average is the 5-day moving average. It's something I've been experimenting with more lately. And, it's building a bull flag. So like, this is a perfect example of something in real time right now where we had a bull snort, it's building a flag pattern, and, we'll see what happens with it here. But, I'm in this name, like literally right now, and we'll see what happens. But that's the type of stuff I'm looking for. Just kind of scrolling through. SSYS is one that's kind of had a big move, and it had another bull snort here the other day. And, is this the flag? Is it not? I'm not sure. Once I finish my review for the weekend, maybe this is one that I'm looking at for Monday. JMF was one that I was on this weekly base here. And, it's gone up, it's got a flag here. Maybe this isn't one I put on, maybe it is. You can't trade everything. But, either or, mentally in my head, whether I trade this or not, when I come review my daily list in the middle of the day, if I come in and I see that this has broken out here Monday, like it's just going to give me feedback like, hey, I'm looking at the right stuff. Or like this AMPL, maybe I come in Monday and it's down, right? Now I'm like, okay, great. Maybe this thing will be down a couple of days. We can look for an opportunity, for a bull flag to build, and we can hop on, right? So I'm just scanning all day long, like looking for opportunity. Like this Anon is a name that a lot of people like. Maybe I come in here and I set an alert up here. Maybe I'm not interested in trading it, but if this triggers, hey, I know that in my nightly routine, like I'm doing the right things, I'm flagging the right names, like and that's important to me because it helps me stay in rhythm. So that's, the type of stuff I'm doing during the day. Then on Thinkorswim, and I think all other softwares have this, I always come in, I look at the percent change gainers list and I filter it by price. So I want to look for the highest price stocks. Dexcom, I should have been on this thing. Like that's what I said to myself Friday. But like BAH doesn't trade right for me. No interest. LC already on. Base. Oh, this is interesting. I was watching this on this IPO advance. It gapped down here. Don't like that. But maybe is what I do is I come in here and I set an alert here. And if it trades through here, I probably still won't have interest in it. But then is what I'll do is I'll set another alert here. Now, if it trades through up here, now maybe it comes up, builds a handle, and 2 months from now we're buying a cup and handle. Like these are the types of things that I'm thinking when I'm going through charts. Like Blink really crushed this name last year. It's been holding this $25, $26 level for literally almost a year now, and it looks like it might be coming out of this trend line break. This almost actually sort of reminds me of Zillow a little bit, actually. Maybe this will trade up. It's got the 200-day crawling down, which is kind of a negative to me, but maybe it trades up and gets back through it. And, 2 to 3 months from now, we're buying a setup in this $45 range. So I'm not necessarily looking to buy this down here. However, I think somebody could have played this wedge pop, but it's like, okay, maybe Blink is going to trade up and we're going to be buying it up here in 3 months. I'm just constantly grooming the things that I'm looking at and trying to find good opportunities. And that's what I'm doing literally all day. Once I get down, so like ARQQ, stuff like this, I don't love to trade, but like this MTTR, this one's really, really, I really messed this one up, guys. But basically, this is the type of stuff, like I come in, I look at this weekly, I know this story. My wife works in the real estate space, and I know agents are using this and stuff, the whole metaverse theme, this could be a name that we really want to be paying attention to. And so if you weren't on it yet and you see this bull snort here, maybe you look for a little consolidation up here at some point to kind of hop on for the ride. So these are the types of things that I'm doing. I'm trying to think if there's, my bull snort list, I kind of build this out over time. I'm trying to be more specific in the names that I'm interested in here. But like A10 was a name that broke out Friday that I think, is somewhat interesting here. I'm not sure. Wolf is another one I'm interested in. I'm not willing to do anything with it yet, but if it builds out a spot, I'm looking at this list, I'm watching it trade, and I'm studying its action. And if it sets up correctly the right way, then I'll find an area to hop on for the ride. So that's the type of stuff I'm doing during the day. Then naturally kind of midday, depending on what happens during the morning. So for example, I was already on in mode here and I added a little bit to it Friday, but like midday, I see this thing like up here. I'm mentally moving my stop up to here, like hard. Like if it loses this, I'm definitely out. And I really don't want it to lose this area, but like, midday, I'm already able to update that, because if it fails here, this thing is probably going to sell off. So that's the type of stuff I kind of go through my list and rehearse, what it is I want to be doing. Like, so for example, I got some in on Perry here. Now for Monday, if let's say this follows through Monday, like let's say Monday it follows through and it's at 30, like I'm gonna be going in and updating my stop to that day's low, or like in that area, just because if it goes up enough, it shouldn't come back. Whereas, if it goes up a little bit, maybe the next day it'll put in some little downside action. But then that day, if it goes up, then I'm updating my stop. So like that's the type of stuff that I'm kind of looking at, midday, just to make sure that I'm handling my account and my stocks the right way.
Perfect. Let's see if there's any specific questions. Oh, people want to know if you use hard stops or mental stops.
So I am sitting here all day, so I use mental stops. With that said, if it's a name that I really like don't think should hit the stop, but I've got a lot on my plate, I may put a hard stop in. But then like, for example, let's just use this as an example. I'm not saying I do this, but let's say I have a hard stop at this day's low. I may set an alert right here. I may put the stop in and then set the alert. And if it gets down there, the alert will go off, and I may go in and like take out the actual hard stop and then execute the stop myself. Now I will say, if this thing reversed and took out this low, like I'm probably going to be gone even maybe before that stop, because I just don't think it should do that if it's acting correctly. But that's something that I might do.
And people are asking, how many stocks are you trading? Not talking about holds, but short term.
So like you can see my list here, where I have like 10 names or something. I don't like getting more than 12 stocks. And I actually think that I need to focus on being in 8 or less. I want to be in bigger positions in less names. I'm failing to do that entirely right now, but I think if I did that, I would do a lot better.
And there's a question about, say you're fully invested and you see an opportunity that you think is excellent. What do? Do you try that new opportunity, or do you stick with what you already own?
So like, look, if you see something that you think is like a potential major top dog, and that you just get this feel like, hey, I've got to be on this thing, and you're fully invested, one of the things you can do is, maybe you look at your account and you say, gosh, XYZ name, I own it, I like it, but it just always seems to lag or whatever. Maybe you decide to sell that one and replace it, because, you may not dislike it and you may not think that it's not going to go higher, but you just think that you've found a name that can go higher faster, because we want to try to have our money in the best names. So that's one way. Or, maybe you love all your names, but you say, hey, I'd really like to free up, like 10% or something for this name. Maybe you take just a little bit off of each name to make room for it. Or maybe you have a position that's a little extended that you think is an oversized. So for example, let's say I had like a 20% position on something that's moved a little, and I think it's a little extended from like the 20-day or the 10-day. Maybe I decide, I'm going to take 5% off this, and then like 2.5% off these other two names that I don't love as much, because I really think it's worth it to get this other name in my portfolio. So, you kind of have to look at what you own and use your discretion. But I will say, for me, and like, again, this is specific to me. If I start getting like 13 or 14 names and I want to get another name, I'm definitely selling one of those names, like without a doubt. I'm selling one of those names, because I don't want to keep adding names It's just like a bad sign for me when that happens.
And there's a question here from Diamond. Great questions, by the way, Diamond. Do you use the TOS scanner for fundamentals or price and volume screens, anything like that?
I don't. I really just use that percent gainers list. I will say, like, if you go in here to some of these public lists, like, so for example, what do I use in here? Where's the Russell 3000 Russell indices? This is one of the lists I use for my A to Z.
Right.
Yeah, I think it's down here actually. And sometimes I'll go through and I'll just say, like, hey, let me look at the NASDAQ 100. New yearly highs, I think, similar to 52-week highs of percent gainers. I think new yearly highs would be a great list to look at. So sometimes I'll look at this. I kind of just use my discretion almost as to when I'm going to do that. But I think that's a good list. As far as the fundamentals, do they have fundamental scans on here? I'm not even sure.
I actually don't use it, but I think Diamond uses it pretty regularly. So they may be able to scan for earnings, sales, maybe. Yeah.
Okay. So one thing that I think is probably something I should be looking at more in the morning is pre-market movers. And then one thing a guy I trade with does really well is just kind of looking for volume in the morning.
Right.
So I think that's something good to do. I'm not really like a day trader though. So I want to be careful doing that type of stuff. And then I'm adding ideas that just kind of don't fit my process. But I think all these types of lists are good to look at. And I do occasionally look at them sometimes. Like, here's one I've never seen active on social. Maybe this is interesting. Maybe I experiment in checking this out. But really all of them kind of support everything else I'm doing, right? Percent change gainers, new yearly highs, new 52-week highs. I do check this gap up scanner sometimes, and I feel all these scanners I use to a degree. The one that I really like every day is I do go in and look at this one. But on a slow day, I may go in and check out all these. But for the most part, I'm looking at my lists and I'm scanning through them and I'm seeing how the stocks that I trade are acting. Because the names on my liquid institutional leaders list, my daily list, they're on those lists for a reason. So there's like a bigger pattern or price structure that's kind of supporting the reason why I'm looking at it. So I want to make sure that I'm not looking at all different types of scans and lists and overwhelming myself when, like, literally I spent all weekend like really putting these lists together, and there's a reason why they're there. So yeah.
Right. And I've seen a bunch of questions about how you build your final date, your focus list for that day. Yeah. And I think we're going to talk about setups and entries really in depth next week. But basically, you're going through your list, just to summarize, but correct me if I'm wrong, you're going through your list, looking for the idea generation, and then picking the best setups that you see for that next day.
Exactly. Yeah. Yeah. And, if I'm fully invested, maybe is what I'll do is I'll put a couple setups on here that I'm actually not going to trade just to see how the market treats them.
Right.
But yeah, that's exactly what I'm doing is I'm going through and I'm trying to find the top, 2 to 3 setups to play in.
Perfect. And there's a question about whether you trade biotechs at all, because that's kind of a whole different beast. Yeah.
I don't trade bios and I don't trade China stocks. I will say, and this is something I've thought a lot about, Myrna was a big winner. And I think it was a little bit unique as it had this huge kind of movement behind it with COVID that in retrospect, I think it was probably worth making an exception to trade it. With that said, I didn't trade it and I'm using hindsight there. So I don't trade bios. I don't trade China stocks. I did trade like Neo and stuff last year, but I think with kind of the things I've seen out of China, I will never consider touching one ever again. There's just too many stocks to trade.
Right. And people really want to hear more about your visualization before the market opens. What do you think about with the positions you own? How are you going to deal with gap downs, gap ups, and also names that you're looking at as well?
Sure. So I'll give you an example from, I think it was last week or the week before, on a name I own. So let's say that I'm, I wake up in the morning and I see something like down big, and I, don't know why, or, maybe there's news on it. I need to go through in my head how I'm going to treat that, because it's kind of unexpected. So in this specific scenario, it was this day, someone was offering it down in the pre-market, and like I saw no news, I couldn't figure out why. It really hadn't had its pullback yet. So my thought process, right or wrong, was, let's say it gets real bad and it comes back to like here, or like below the 20 EMA, but it was like down here. So I was thinking, like, if it just slices through that, like, I'm going to sell it, and that will suck. Like, that's actually what I was thinking. But I was really thinking, like, the goal here is we want to see where this stock is supported, because it had the weekly, it's gone up, and luckily it was BS. And I found out after the fact, somebody was offering it down at like 9,000 shares, and they were likely offering it down to try to buy more shares. It was probably a institutional trader, or, a trader at a hedge fund or something who likes the stock. And sure enough, I mean, they were able to offer it down on 9,000 shares, and it trades, or here we can even look at it on this first 15-minute bar, it trades 170. Maybe that guy blasted this and picked up 6 figs on the cheap or something. So that's a situation where mentally I'm like, all right, like, don't freak out. Like, we like this thing, we see the big picture, it hasn't even pulled back yet, there's no news, like, I can't see anything. Like, I'm also kind of thinking, like, what do these guys do, what else could have happened that could have affected this thing? I couldn't think of anything. And luckily in this situation it worked out. It doesn't always, but mentally in my head, I'm trying to rehearse that, because I know that this is an outlier situation and I don't want to make an emotional decision. So that's an example. But really, I'm kind of going through my names, and I kind of know what I want to do. That's kind of ingrained in my head. So the main things that I'm focused on are, like, the names. Like, let's look for, like, Monday. Let's just pretend Fubo is going to be on my list, right? Mentally, let's say I'm getting ready, and this thing is honestly still a little too loose for me to want to trade it. But let's just say, for whatever reason, I really like this hourly, and specifically through this 30 area. If it gets through there, I want to trade it. Maybe mentally in my head, I'm saying, if this blows through 30 on the open, I don't want to chase it. But if it goes up to, like, 30 and a quarter and comes back, I want to look for an opportunity to get long it. So this isn't a top dog situation where I want to be involved in this right on the open. But if it shows positive price action and then sets, maybe 30 to 40 minutes into the day, let's look for an opportunity there. Because then, in my head, I don't feel like I need to be aggressive on this on the open. And if it goes, it goes. But I also know, it's really not going to go anywhere till it clears 31. So, maybe it goes and I feel like I missed it, and it is what it is. But then, the next day it has a down day and I can get on it through 31. So mentally in my head, okay, I don't need to be aggressive with this on the open, but if it settles and there's a low risk spot, kind of as after things settle out, I can play it. So in my head, that's where I'm at. Whereas this MQ, I may take a little bit of a different tone for, hey, it's like extended, but it's holding the 5-day here. Buyers have supported it here. If it turns up, maybe I want to be ready, but it's so volatile, I don't want to, throw a huge position on right on the open. Okay, mentally, let's take like a smaller position if we're going to trade it near the open, and then we can look for opportunities to try to add to it. But I think this is a special situation. So in my mind, I'm thinking I want to have some on if it goes, but I also don't want to put a ton on in a no liquid name like this and then have it go up, flush me out, and then work. So, that's kind of how I'm thinking about those situations. I'm going through in my head, like, what do I want to do? How active do I want to be? How aggressive do I want to be? And then I'm just trying to relax, maybe I throw on some music or something, and I'm ready to go.
And how many names are usually focused on to buy or execute on a particular day?
2 to 3. That doesn't
Yeah,
mean I don't trade more than that, but sometimes I'm doing things in names I already own too.
right.
And yeah, I try not to overwhelm myself, um, because I'm already like a chronic overtrader. So if I have like 10 ideas, like that's that's bad news. I want to have, you really shouldn't be like buying like 10 new names in like one day. So I try to keep it pretty concise. Also, if you're coming into the day with like 10 ideas, you might trade 10 ideas really badly, or you might trade 2 or 3 ideas really well.
Right. Right. And I know the answer to this, but you're not waiting around on Twitter and waiting for somebody to put out a ticker and execute it based on somebody else, right?
No, I don't even really, I try not to look at Twitter until after the close. I think it's probably the worst place you could look to during the day. You should be doing zero work as far as like new ideas, really. Like literally, if you're following somebody on Twitter intraday, like
Right.
they've already bought, you're buying after them, your risk rewards messed up. Like, do the work, get ready for the day. Like Twitter to me is not something I'm looking at during the day. And
Right.
if I am, it's because like I don't have anything going on.
Right. Perfect. So I think we should take the time now to kind of review last webinar's homework, UPST.
Yeah.
And before we do, we've got hundreds of people in here. It's awesome to see. I want to see hundreds of homework submissions this week. Writing down your weekly and day routine. I think it's so important to have a process, stick to it, prepare yourself for success. And yeah, it would be great to see all your responses. And I think establishing a consistent routine is one of the best things you can do to level up your trading. So yeah, looking forward to all those submissions. And yeah, let's talk about UPST, which we assigned you guys to label with the wedge pops, all of that, the price cycle last time.
Yeah. So for me, I'm just going to kind of go over the whole life of UPST, kind of when it came on my radar. So I can see here that UPST pretty much IPO'd and went higher right off the IPO. So I had kind of noticed it, but like I said, I'm more interested in stocks, generally a little after they IPO. I think names like this are usually flips on their first advance, which this proved to be. And it came in, and then really where this thing, I was like, whoa, like something's going on here, is when it reported earnings and just absolutely exploded. Like, look at this volume, massive bull snort, followed by follow on volume, but just like crazy. So I actually think I sort of tried to get in this year. And then when it had this wedge drop here, it just clearly needed more time. But the first time I really got into, sort of trading UPST was down in this range, where to me, this was like a wedge pop here, and it rallied up. But really, this price action was still too crazy. And reason being, I think it had the lockup before it, or like the lockup, I think, came in here. And you see this big shooting star here, pre-lockup, and then sure enough, it kind of had the wedge drop right here. And to me, this is all like sort of pre-lockup type trade. So I think you can expect IPOs to trade much more volatile with crazy price action like this pre-lockup, and then they become more uniform. The institutions have done their work on them. They've had 6 months to really study the earnings. They've had 2 reports, and that's when you start to get a real base to trade. So for me, that was a wedge drop. I think a lot of people, like I think some people were like pointing to things in here, like oh, this is the reversal extension and stuff. And really, like to me, this is just chop. This is just like pure chop. I did, try to trade this a couple times in here, and it was just chop. Like nothing really got moving above here. Like I can tell you, I tried to trade this in here, and it just didn't work. But the first like real pattern in here that I tried to buy, like that I held, because I tried it a couple times in here and didn't hold it, was right in here when it took out this high. And then we were kind of coming up to earnings, and it just didn't really get going for me. So I think I just took it off for like a small gain, even though it did nothing wrong. I just didn't have the cushion that I wanted to hold into earnings. So all into here, this is just kind of chop. You're really watching this range to kind of get things going. And there's just not really any patterns here. And one of the things that I think is so important is to identify the change in character in a stock. Because when you see a change in character in a stock, that's a sign like, hey, it may start to get easier to make money in this thing. And we saw that on earnings here. So this was, a post earnings per share gap up with massive volume. So this is a bull snort, and the very best kind of bull snort. And that when it took out the next day's high, that was the buy area, and it went. So I do think in here, I did start buying this stock on this gap up. You can look for a spot on the intraday chart to get long. But this, if you worked or something, the real buy area here is through this day's high. And we went through that high, and we went up, and then your next buy area was this bull flag. So to me, this is a basin break here. We have an actual wick play here where the price trades inside the previous day's wick. And then when we take that out, that's the trigger. So basically, this is your day to take note. This is your wedge pop to me. And you could call this a cross back right here, where it's the first pullback into the moving averages. It's in the form of a bull flag. Then this is, kind of your first basin break. It's almost like one big consolidation kind of, but this is definitely a really, really good buy area right here through here. If you didn't catch this buy area. And then as you get later on, the buy areas are worse and worse kind of, just because they're not as early in the cycle. I do think that this inside bar here on very low volume was another area where you could kind of see that if it took it out, it was going to head higher. Whereas these ones here, like there's a reason they're kind of choppy, because it's just nothingness. And even this one, really, like you want to try to get this buy area or the crossback buy area, because later buy areas are going to be more likely to have shakeouts. Like right here, like you may not have bought this because it gapped and filled right away. But it just gets a little tougher the later you are. But basically is what we do is this is a buy area, basin break. To me, this is the first extension. And then we pull back and correct. So for my style, I'd have been stopped out right here on this wedge drop. I had actually sold this on this rally just because I kind of viewed this as a potential extension, and this is one. So in retrospect, this was the first extension, and definitely in retrospect, this was the second extension right here. And I'll talk about a mistake I made here that we can all learn from. I had taken the approach that since the index went into a correction here, that this kind of reset the cycle. And so I got long this again in here. I tried buying some in here and made some money, but really is where I got long it again was in here. And I had taken the approach that since the index had a correction, this thing reset, and we had gone up, and I was expecting like a bull flag or something to build here and for us to go higher. Now is what I'm realizing is like, no, you have to judge the extensions just based on their own merit. And I've seen this in like a couple stocks since where I felt this way, and no. And the reason being is this showed strength here, but like as the market corrected, it rotated into new names coming out of here, whereas UPST still ran higher. But then, this name was in the news and stuff. And that's often the types of things you'll see, on that second extension hire. So I think in retrospect, this was the first extension. This was the second extension. And then right here, this is a big bar right here, because if I thought this was a flag and we rally up off the EMA here and then fail, to me, that's a sign. And I actually exited a lot of my position here. And I held some that I put back on here, and I thought I had it here. And then when we failed through here, I sold my whole position. And then literally Friday, I thought this was going to be a potential wedge pop, and I bought through here, and I took a loss here. But at this point now, I think that this is actually potential bearish crossback. So you had the wedge drop, bearish crossback, and if we follow through down here, I think it's kind of just confirmation this is in a down cycle, and it's just not worth paying attention to right now until it resets. It may need earnings to reset, but I think it's just kind of dead money here. But basically, wedge pop, crossback, base and break, first extension. To me, this is a wedge drop right here, and then you kind of have a wedge pop here, crossback, reconfirmation. This is really another buy area here, and this did prove to be the second extension. Which one thing that I'm really good at is when I analyze a stock wrong, which I did in this case, I'm good at admitting it. So I admitted right here that I got this wrong, and so then we had a wedge drop, and now I think we're seeing the crossback. And the mistake I made though is once you identify that second extension, let the stock trade for 6 to 8 weeks. And I think we're in that phase here where it's just going to chop around for a while, because it had such a long move. It could, the best thing this thing could do is trade down next week, in my opinion, kind of touch the 10-week. If you're one of those people that just likes to blindly buy off the 50-day or something, maybe you can watch it there. But for me, I'm going to let it kind of rebuild its structure. And, if it just doesn't rebuild, then I'll never trade the stock ever again. And if it does rebuild, then we'll get a wedge pop at some point in time. So that's kind of how I'm approaching it right now.
Perfect. Yeah, that's awesome. That I really enjoyed walking through that with you, and I'm sure everybody watching is as well. I think now we'll just kind of move on to general Q&A for a bit. And the next homework assignment, post your daily and weekly routines. We've got space in that workbook for you to write it down, and we want to see as many as possible on Twitter for sure. That's really going to help reinforce all the concepts that we learned in this presentation. So with that, I'll just open it up to any questions, and I'll kind of kick things off with outside of preparation with analyzing stocks and finding setups, Oliver. Is there anything you do before the market to get your mind right, so you're kind of in the right mindset to really execute on that particular day?
Yeah, so I definitely try to always eat breakfast. Because sometimes I'm so focused and I miss lunch, if I don't eat breakfast, like I'll start getting a headache around like noon or 1. Whereas if I do eat breakfast, I'll get that headache like around 3. I try to make sure that I've got water. I got water at my desk. And I just have everything I need to trade with a clear head. I don't like drink heavily during the week or anything. Like I don't think anybody should, but especially if you're trading and kind of having your mind right is important. Maybe I have a glass of wine or something with dinner, but I don't, you definitely don't want to be hungover or something when you're trading, especially if you're trading for a living. So I eat breakfast. I do that visualization, that kind of mental rehearsal, which for me is key. I already know what I'm going to do, but I almost think since I do that every day, just kind of like mentally, I'm kind of ready for the open.
Right.
So I don't know, it's probably almost like a meditation type thing, because it just like calms me down and gets me ready. Those are kind of the things that I do.
Gotcha. I'm not seeing too many. Let's see. Here's the questions coming in. So once again, let's kind of revisit this. It seems like the question is significant work with many lists to manage. What are Oliver's recommendations for people working full time? Where should you really focus your attention if you don't have as much time to watch the market every day?
Yeah. So I mean, look, if you work full time, you still look, this is like the big leagues. If you're going to play in the market, you're playing against people who do this for a living. I think you can definitely beat them, like for sure. I actually think a lot of the quote unquote pros, I know this from when I did institutional sales, most hedge funds lose money. Most of them are really, really bad at trading stocks, but the good ones are the people you're really competing against. So you do need to spend the time to learn this craft, and it can take years to do that. But then if you're trading full time, I think kind of building some sort of liquid institutional leaders type list, that's a good group of stocks that you're going to trade. You can review that every night, maybe in an hour, and then, set your 2 or 3 key focus names. And is what, I did when I traded full time is I had the Thinkorswim app, which I think if I open it, it'll get rid of this. But I would do just what I did there. I have an own list, and then I have my key focus list or my focus list. And I think it's good to try to be able to watch, the open if you can, or at least, have your phone. And then the close if you can. And one of the things that I think is like a good trick, and I definitely use it today because of when I traded, when I had a job, is, let's say that you watch the open and something goes, but, you have a meeting, maybe you buy a part of your position, so that you're not like fully loaded, and then you got to go into this meeting. And then, if it closes well, maybe you buy the second half of your position, and then maybe top it off the next day on follow through. That's like a way to kind of piece into names to kind of protect yourself, because maybe you can't watch the whole time. But actually that is almost sort of what I do now, but I sort of do that because I traded when I had a job, and I just like developed that approach because I had to. But I think the key is to have like 2 or 3 ideas maximum if you work full time, and just focus on those. Like definitely stay off Twitter, because like Twitter will make you feel like you're missing out big time, when in reality, if you are working full time and then you get 40 ideas from people on Twitter who probably aren't even actually trading them, you're gonna like just be crazy. Like focus on the 2 or 3 names you came into the day with, and just focus on that. And if you miss the high flyer of the day, who cares? Like your goal is to make, some good trades and make progress on your account, trade your own ideas, because that's how you're going to get better. So that would be my advice, is to have those 2 or 3 ideas and just strictly focus on those, and then managing the positions you own.
Absolutely. And there is still a little bit of confusion about where you get your institutional liquid leaders list and how you build that. So how do stocks get onto that list, basically?
So it's at my discretion, and let's just kind of go through. So like these are not sorted at all. So let's just kind of look at the names on here. So we've got our Amazon, we've got our Google, like Chipotle's on here. This was a nice winner for me in the past. Melly, which to me, I'm not looking to trade it right now, but it was a good winner. Shopify, Tesla, HubSpot, ServiceNow. Like these are I'm it's tough for me to answer, because I consider these kind of like name brand names that like everybody knows, but I forget that like I do this every day. Like Align was a name I traded last year. Payc's been a good name. Like these are names that are liquid. A lot of these names, if we go through them, I guess MDB only trades like 500,000 a day, but like Lulu trades like 1 million shares a day. Definitely a well-known stock. A lot of Can Slimmers definitely did really well in this stock. It was a top dog in here for sure. So these types of names like Goldman Sachs, like I'm not trading Goldman all the time, but to me, it's one of the top banks, and, really I should have an alert right here. So that's on this liquid list. Like, SE is on there. Everybody knows that name, but like Deer, this isn't a name that I'm really trading, but it's like probably one of the leaders in the agribusiness space. So I keep it on here. MasterCard, I'm not trading, but I keep it on here. One of the reasons you might keep MasterCard on here is, is MasterCard and Visa's business being disrupted right now? Potentially. And sure enough, we're seeing them start to get distributed below the 200-day. We'll see how that plays out. But I'm keeping these names. Like UPST just did real well in this thing. So, now it's on this list, whereas, 6 months ago, it definitely wasn't. But, when you make money and do well in a name, I usually add it to this list. Like Vive, I haven't traded Vive in so long. But you can see some of my old alerts from years ago that are still there. Twilio, like Twilio to me is dead money. I'm actually just going to take it off the list. But as what I'll do, I'll set an alert right here. And if that alert goes off, I'll set an alert up here. And if that alert goes off, I'll consider trading this again, probably above like 371. But I'm not trying to be the guy picking the low. Like if this rallies up here, some guy on Twitter will probably message me and tell me I'm an idiot, and I don't care. I'm looking for, like Zoom and stuff are still on this list because I did well in them last year, but I'm not trading these. These have been dead money. This thing is still showing lower highs and lower lows. I think, I did try to play this wedge here and it kind of worked, but it petered out. It's still on the list because it's not completely broken. If you look at the monthly, you could say maybe this is a developing double bottom. But, if this gets back up to 400 area again, up here, maybe it'll set up. And if I miss this 130 points, this 50% move, I don't care, because one of the best pieces of advice I've ever gotten is if a stock is going to be a huge winner, it's going to make a new high at some point. So who cares if you miss this 50%? Like you can be trading something else where it goes up much more. And then, you get this back on your radar up here. So I still keep these names on this list, even though I'm not, really trading them, because there are names on this list that I am trading. Like Net is still in play. D-Dog's still in play. Airbnb may just be getting set to go. Whereas I have traded this, but it hasn't really been a winner for me yet. But it's got that like pedigree, right? You guys know Airbnb. I think the theme of Airbnb is pretty obvious. And if it were to get through these areas, and especially through 177, like this thing could be in play. So this is on my radar. Whereas something like Fiverr, if this thing breaks down through this area, I'm going to take it off my list, just like Twilio. I think it's broken. These are the types of names that I've made money in, or just names that are, Baba's on here. I'm never going to trade Baba. But Baba was one of the China names that I thought was safe. And when it IPO'd, I was real interested in it. I traded it for a while, but Baba, Baidu, Neo, those are the types of China names I think are safe. But so I have them on this list, but I'm not trading them. But just these types of names, like Teladoc is still on here. Not interested in trading it. Maybe after this volume it did, it's setting back up. If we were to look at the weekly, it's just still got too much overhead. But I still like the story. I like the theme. If it traded a lot higher, like maybe I'm interested in it again. So I don't know if that's like answering your question, but it's more just like, liquid names that I've either made money in before, or something like Airbnb, where it's on my IPO list, but I find it to be like an especially unique IPO, and that it's already like a $60 billion company. It's like a unicorn versus just like some other type of IPO. So like, an Uber's on this list, which all Uber's done is disappoint me ever since it IPO'd. But, it's like kind of that liquid leader-ish type stock. So I guess calling them a liquid leader is maybe a false way of describing this list, but Like for example, Spot's been a stock that's been out of favor for a long time. I really did well in this name last year, and then through here, and then I started going through this list, and I noticed 3 waves down, which is something you look for in a name that's potentially getting sold out. I noticed this wedge pop here, and I can't remember, I traded it in here and I sold it here, unfortunately. But then it reported earnings and it gapped up, and maybe you trade it through this pivot here, and you could have got long it, and it's breaking this weekly trend line, and it still has distribution here. But this is the type of example of something that I traded in the past that may be coming back into play. So by going through this list, you can stay on it. Crowd is a name that corrected, and I've traded a bunch this year. These are the types of names that I'm keeping on this list.
Yeah, I think that answers the question for sure. And some people had a question about your overall trading setup, like how many monitors you have. They noticed you had kind of multiple screens. So can you talk about your overall setup? And you actually said before we started recording today and hopped on, they're actually thinking about eliminating one of your monitors, which I think is interesting. You're really trying to focus.
Yeah, so right now I have 3 32-inch screens, and basically on my screens on my left and my right, I have the daily and the hourly for 2 stocks. So I got like 4 stocks, and then I've got this middle screen with my watch lists, and then the multiple time frames. I don't think you need all that. I think I could trade from my cell phone, like without a doubt. Yeah. I literally won the US Investing Championship from my cell phone. So I don't think you need all this junk. I think actually it can get in the way. I think if you can see what you own, and you can see your top 2 to 3 ideas and nothing else, and not looking at a million things during the day, it might actually be a better thing. So yeah, I was telling Richard how I was thinking of getting rid of one of my screens, just because I think I just have too much stuff. I could definitely trade for my cell phone, like without a doubt.
And it kind of goes back to one of your big influences, Nicholas Darvis. I mean, he was able to trade and do incredibly well by Telegram, not even with something like Thinkorswim or TradingView. Yeah.
Yeah, like guys, literally, if you go think about like Jesse Livermore and Darvis, and I think Livermore, if you read the book, he had all these analysts and something in a room, and when he really got big, you have more information from your cell phone than he had. There's no doubt about it. So it's the best time in the world to be a retail trader. You have all the information of the institutions, and you've got the advantage of having 0 liquidity restraints. Like if you trade less than like $50 million, you're pretty good in my opinion.
And people like that you say you trade for your cell phone. People were wondering how many trades you usually put on in a week, a typical week.
Some weeks I don't trade much at all. Like some weeks I make a lot of trades, and I do take a lot of paper cuts, where maybe I make like 7 or 8 trades in a day, but only like 1 or 2 of them stick. And then sometimes like I'm making like 3 trades to get into one name, like maybe I buy a little more, so technically that's like 3 trades, but it's sort of like 1 trade. So just depends on the week. And ideally in corrections and stuff, I'm not making any trades if I see it coming correctly. So it's tough to answer, but I would say I'm making no more than 50 trades in a week probably, and if I made less than that, I'd probably make more money.
And people are curious about, during the day, are you watching the VIX indexes on any of that, or are you just kind of focusing on your list and what you've got prepared?
Yeah, so I mean, look, I do look up the cues, and one of the things that I think is a reasonable indicator that I'm learning about is when, like, for example, Friday the VIX was green and the market was green. That to me is kind of a red flag that you want to watch out for. The conclusion that I've come to is that the VIX is a total waste of time to look at. And look, I say that with the caveat that, little divergences like this can be important, but I also think that the noise you can create by looking at the VIX can shake you out of the market more than it helps you spot corrections. So I don't watch the VIX really. Like you can see, I've got some lines and crap drawn on here, but I'm really not looking at the VIX. The indexes I look at, but more for the overall trend. So for example, like once we had this wedge pop here, I felt like the market was in a good spot, and I still do. As far as whether the index trades down or up or what on Monday, my guess is like we're still going to be in a good environment no matter what it does. So I more want to understand like the underlying movement of the index, which I think right now is favorable. But I don't want to be looking at every little tick of the index.
Perfect. And people are wondering about order execution. Do you preload your orders? Do you use market orders, limit orders, that type of thing?
Yeah, so I use market orders. And yeah, like coming into the day, if I have, a couple names that I want to be focused on, I'll have them up. As for people who trade, and work full time, you're probably trading from a phone or something. I love the Thinkorswim app. I don't trade through Thinkorswim anymore, unfortunately, because I think it's freaking awesome, the app. So like I could do orders so quick on my phone because I did it for so many years that I was really good at it. But I think knowing what you want to trade, having an idea as to how many shares you want to be buying and selling, you should already have that done pre-market. Like you shouldn't be like, oh, I want to buy crowd. Oh, how many shares do I want to buy? Like that's not what you should be doing. You should know the shares because you should know where your out is, and that should help you determine your share size. But you should have all that done so that when it's time to actually execute, all you have to worry about is like putting the order in and executing it.
Perfect. Let's see. Just seeing if there's any more questions here. So once you've got an idea, you see a night, it comes up on your full snort scan, for instance. Where do you go to learn a little bit more about what the company does and check up the earnings and sales? Is it just MarketSmith, or do you go a little bit further?
So sometimes I don't at all.
Yeah.
Yeah. Yeah, like sometimes I don't. And a lot of the times I'm trading companies. So let's look at a recent company because, the triple Ds and the examples I showed. So like Perry. Yep. Perry is a stock that I just got off the Pulse Snort list. And basically is what I did is I came into MarketSmith here. You see MarketSmith, right, Richard?
Yeah.
Yeah.
Do you want to maximize it though? So people
yeah.
a little bit
Sorry.
better.
Yeah. And so like if we look at this Perry, like it's got a huge base, which is sweet because we want stocks like this is a BGU, a buyable gap up. Like I didn't buy it here, but basically it gapped up and now it's pulled back and built a bull flag. So if I can get on this little bull flag and manage my risk here, like MarketSmith says to take a profit here, which, I'm just trying to buy. So if it can push out of this little bull flag, really I'm finding a low risk spot to kind of hop on this massive base. And that's really what I'm looking at. But the things that I will do when I see a stock like this gap up is I'll come up, Israeli developer of customized e-wheel software for consumer and home user markets. I don't know what the heck that means, but I do see it like in my head. I'm going, oh, Israeli, like, because I prefer trading US stocks, but I think there's some really great companies that come out of Israel actually. And then customized email software. So, I know a little bit about business and email marketing and stuff. So that's like the first thing kind of coming to my head. Now I'm looking at the market cap. It's got a very low market cap, like under $1 billion, which to me is fairly attractive in the sense that, we could be onto something in the early innings. And then I really am just coming down here I'm looking, it had major earnings growth last quarter. The earnings growth is still good this quarter, but why are they different? Why isn't the revenue growth as strong as last quarter? I'm not really sure why, but those are kind of some immediate things that go through my head. And then something that I always do is I always go on their website, Parian Networks. A lot of the time I'll just type it in, even though MarketSmith did give us the website, I believe, Parion.com. And I will just kind of size up the website, a business solution for every digital. I like that because I think the world is moving digital. So like that to me is like, okay, like this is interesting. Digital dollar. Capitalize on shifting budget between three main pillars of digital advertising. So like I'm looking for these like little triggers that I think are interesting. Search, social, like, I'm just looking for these little things. And this is a clean website, which I like. It kind of tells me that, somebody's built this. I mean, you can have pretty janky websites out there. Trust me, if you start looking at enough of these. And I'm just trying to get in an overall sense for what they do. So the technical for the most complex brand needs, and I'll just read through the website. I'll try to like AI, like I love to see AI and machine learning. Like this is the type of stuff that optimizing traffic. So it's what I'm thinking right now is, okay, like people are coming to my site or I have some sort of email marketing list and I'm going to use AI or machine learning to help me best apply that list and run my sales funnels or whatever. To me, that is what I'm thinking this company does right now. And I actually like don't 100% know. And like I've learned recently that can really turn people off. But I can't say that I know every little thing about what this company does. But that's kind of how I'll look at the website. I'll go through and I'll just kind of click on it and I'll start reading through all this stuff. Like I like to see like they're partnered with Nike, they're partnered with McDonald's, Visa, Target, Starbucks. Like these are big name brands. Like these type of relationships are what's going to drive revenue growth. So I kind of come through and I look at that type of stuff. And it might sound weird, but I almost like seeing stuff like this because it tells me like this is a real company, and like I've worked in the corporate world, I've sold software and stuff. And, to me, this is like a real company. They've got culture, stuff like that, little things that I get it, maybe shouldn't really matter, but, and then I just kind of read through the website. That's kind of how I learn about companies. And then, yeah, that's kind of how I do it. I know that that's probably not, what they teach in school, but that's how I decide if a company is interesting or not. And I do think this is really interesting company based on what I see here.
Absolutely. Yeah, I think Ray was interested in this one too Friday.
Yeah, I think this is one to keep an eye on.
Yeah. Let's see. Are there any more? Oh, this is a really good question, a good thought. So people want to know about kind of your journaling process, if you have one, and also if you do any post analysis regularly, every year, every month, what have you?
Yeah, absolutely. So I use OneNote, which I have some personal stuff in here, so I'm not going to pull it up, but I use OneNote, and basically I think for next sessions, what I'll do is I'll clean this up and I'll take some of the other stuff I have out of here and I could show you, but I use the different tabs on OneNote, and is what I'll do is so like, for example, let's look at like UPST, a trade we're all on, right? Or, not everybody, but I'll use the snipping tool and I'll go here and I'll, snip out the chart. Well, actually, is what I'll really do is I'll go here and I'll label where I entered and all that stuff,
right,
in different things. And then I'll snip it and I'll go into OneNote and I have a tab of like, trades I've taken and stuff like that. And and then also names that I don't trade that like were really good winners. Like, for example, I found this net move here, like very peculiar because it like proved to be a major shakeout. So I actually snipped this and I put it in there to kind of keep an eye on, if I see something like this happen again, I'll have a reference for it. So I do all that in OneNote, and I find OneNote to be really helpful way to organize it. I did experiment with this site TradeView, which I just couldn't get it to work right. So I think I'm going to try this other site, TraderSync, TraderSync. I'm going to experiment with that. I'm not the most tech savvy guy, and I found that like OneNote is probably like not the best way to do things, but it works really, really well for me. So, I would like something like TradeView though, where I can, see my stats a lot better. Whereas I'm kind of calculating a lot of that stuff myself in Excel and stuff. And I know that's not the way to do it. So that's, some other things that I'm looking at using.
Yeah. So in terms of post analysis, do you have like a regular 1-year thing where you're looking back on past trades, or it's nothing so formal as that you're just kind of looking back at in your OneNote and looking at how you handle things?
So I got to say that I like really like don't forget trades. Like I almost feel like I'm like photogenic in that regard. And I'm like pretty much doing post analysis like all the time. Like I really, unfortunately, one of the things I'm working on is I really wail on myself for the mistakes I make. Like literally, I've been thinking about this trade literally all week, and MTTR. I bought this thing in here. I got shaken out on the close and it ripped, and it's just like killing me, like literally killing me. I've rehearsed everything I did wrong like 50 times this weekend. And like I almost like can't even like sit in my own skin right now because like all I'm doing is thinking about this trade. So I'm definitely doing all that, but I'm really trying to. I have basically like just like a built up archive of like different trades that I've taken, trades that I've messed up, and I've built it all in OneNote. That's kind of what I do. I don't do like an annual review because I'm kind of doing it throughout the year. I think I trade too much to do an annual review. It's more like a weekly review, and I kind of get a sense like, hey, you over traded this week. You just were a moron. You got shaken out of stuff on X day or whatever. And then I'm focusing on like the big trades from each run. Like, there's usually like 2 to 3 runs a year. Like I'm focusing on the big trades there. Even if I didn't take them, I'm snipping them out and analyzing them, and just because I want to make sure that I get an eye for the patterns that worked.
Perfect. I'm not seeing too many new questions. We've been going for wow, 3 hours and 41 minutes. This, I mean, I enjoy this immensely. I think it's so important to talk about process and routines versus just talking about this name and that name, because the process is what leads to those great opportunities that are going to happen in this market cycle, in the next market cycle, 10 years from now. So I enjoy this immensely, Oliver. Are there any kind of final thoughts that you kind of want people to walk away with from this presentation?
Yeah, and then so like the other thing is like I'm always trying to get better. So like for example, like I usually have up like this has my earnings whisper, my FinViz investors and stuff like that, and then I've got my MarketSmith tab, and then usually I have a tab like for example right now I'm working through this interview Richard did, and I finally just finished the Salim interview. Like I watched it like 3 times, and I'll just like sometimes if I just don't have time during the week, this will accumulate like 3 or 4 tabs of stuff I need to read or an article I thought was interesting. And I do this on companies I'm interested in too. So like, let's say that I saw a cool article on Perion, I'll open it and I'll put it in here. And I kind of know post market one day or whatever, I've got to go through and read this, or like, this was a website that I was like really looking at this week. Like you can see I've clicked in here, so like this was on my tab all week, and going through watching the videos, etc. So I'm always like trying to get better, like always. Like trust me, you guys have no idea. It's like you gotta be You got to be.
Yeah, always improving. Everybody makes mistakes, but it's just how you learn from them that really is what matters at the end of the day. This has been awesome, Oliver. I think we'll kind of leave it there. To everybody, I'm really looking forward to seeing your homework on Twitter. Definitely go ahead and post that. Tag Trailline, tag Oliver, and use the hashtag Oliver Kell Masterclass. And with that, we'll go ahead and call it there, and we'll see you in the next couple of weeks to really go through a blockbuster webinar. I think that's going to be a long one for sure. Going through entry setups, selling, stop loss management, position sizing, maybe, although that may be a later one, really in depth. So we really look forward to seeing you there. And I see a ton of thank yous in the chat, Oliver. And I really enjoy this, so I know a lot of people got a ton of value from it. So we'll call it there. Thanks again, Oliver. Have a great rest of your weekend.
All right, cool. Thanks, guys. Let's get in this week. And, I hope this was helpful to everybody. And I'll see you on session 3.
For sure. Thanks, everybody. Take care.